Good afternoon. Welcome to BW Business World. A very special show today, Budget Powered Panel. What's in its store for startups? We are here to discuss the budget announcements and basically analyze and debate them. Finance Minister Nirmala Sitharaman yesterday announced many announcements for respective sectors. Finance Minister also started budget speed with seven major priorities and called them Saptarishi. And those seven priorities included inclusive development, reaching the last mile, infrastructure and investments, unleashing the potential, green growth, youth power, and financial sector. In my opinion, financial sector, financial inclusivity was the most highlighted ones. And of course, after the railway outlay budget, we are here to basically discuss, debate, and analyze the budget announcements, and more specifically, how will these announcements and actions will impact the businesses in respective sectors going forward. But first and foremost, let me introduce my panelists today. It's my honor and privilege to be able to speak with you all. I have with me Mr. Ruchit Agrawal, co-founder and CFO Cars24. We have Mr. Prashant Tandon, co-founder and CEO of Tata 1MG. We have Mr. Rahul Garg, founder and CEO Moglix. We have Mr. TCM Sundaram, founder and vice chairman of Chirate Ventures, and Dr. Sudarshan Bhattacharjee, principal economist, UB, and it was earlier called Credivenue. Welcome.
Thank you. Thank you.
So today, when we, I mean, as a media person or from this the side of the table, we used to say that it's always easier to write post-budget because we always do praise our government and finance minister to outlay the budget announcements and other related outlays of budget. But today we are here to, and I'm seeking your critical and analytical viewpoint on budget announcements. Can we start from Mr. Tandon? Your opening remarks and how was the budget in your opinion?
I think it was a pretty decent balanced budget, especially coming in an election year. The way fiscal prudence has been given a lot of attention, that was very important. And I think there's strong continuity in a lot of good things that have been going on.
We lost you in between. Thanks to technology, it sometimes happens.
Okay,
no problem.
sorry
No
about
problem.
that.
Take your time. No problem. Take your time. I'll come back to you in the next round. Mr. Agrawal, what do you have to say? How is the budget for you? I can't hear you.
Sorry. Yeah, no, I didn't realize I was on mute. Well, I will just build on what Prashant was trying to say. And I'm sorry if I steal some of your thunder, Prashant, there, but I agree with one thing that he mentioned. It's quite a balanced budget. Look, I wouldn't say I'm a budget expert by any means. I know what happens in my sector and what happens to me as a person, as an individual taxpayer in the country. So I'll limit my comments to that. But I love the analogy she created, the finance minister created with the 7 pillars. And essentially the one that sort of resonates the most with our business and us is the last mile connectivity. Anything to do with transportation, infrastructure, augurs very well for the cars in the country. And we love cars, right? We deal in cars. So I would sort of focus my comments only on that part.
Good to know. Dr. Bhattacharjee, what do you have to say?
Yeah, thanks. So, as my co-panelist had already touched upon that 7 pillars the budget had, and, some of the pillars are very close to our businesses, particularly the financial sector was one of the pillars actually, then infra and investment. So they all are, very much credit positive for us. So just to touch upon the budget, how was it? So budget was, it tried to strike a balance between the fiscal prudence and the growth impetus that was also required. So, like, it made the fiscal deficit at 5.9% of GDP for FY24 from 6.4% estimated. And but the finance minister was also very particular with a resolve to, bring it down to 4.5, below 4.5% by FY26. So that is a positive thing for the fact that it reduces the interest cost burden going forward. And also on the other side, if you see the tax buoyancy, so the tax buoyancy is one actually, which is very positive for revenue mobilization. Earlier, it was 0.8%, 0.8 in the previous financial year. So in the direct taxes, if you see the corporate tax, income tax, they would have a modest growth of about 10.5%, which is roughly as close as the nominal GDP growth for next financial year. And also on the indirect taxes, you see that the GST would continue to have its growth momentum. Now, this is particularly for the fact that, India's tax compliance have increased significantly. And apart from that, the business sentiments and all these things, our high frequency indicators indicate a strong recovery in the economy. Now, the disinvestment target is like the government might fall short of it. So it budgeted 650 billion for FY23. And in the revised estimate, it has brought it down to 500 billion, and for next financial year it is 510 billion. So the major disinvestments are in the pipeline, maybe the Hindustan Zinc, BPCL, and so on. Now, a good part is that, the capex has put major thrust on the budget has put major thrust on capex. So it has bumped up capex to 10 trillion from 7.2 trillion in the revised estimate. And this is coming about 3.3% of GDP, which is about 37% increase from the previous financial year. And this headroom was created. One was the higher tax mobilization, and secondly, the subsidy bills have come down actually. So major subsidy bill have come down by 28%. So this is not in nutshell the budget arithmetic. And so as I said, the government has done a very good job in striking a balance between fiscal consolidation and growth. And on other side, but the tax revamps, particularly in the personal tax front, that have been done, the rebates that were given both to the middle income and to the high income people. So this would actually, increase the disposable income in the hands of the people and effectively increase the spending. So with that note, I would stop.
A very good point towards your end of the comment. Disposable income, of course. And you rightly mentioned that finance minister was very open and laying emphasis on financial inclusivity, or if I can say fintech sector particularly. Is Mr. Tandon back?
I hope I am audible.
Go for it.
not okay. No, I think already the most of the point was made. I think it's a very decent balanced budget in an year before election, for where growth and fiscal prudence both had to be taken into account, and both have been taken into account. The capex push is very welcome, and it's great that there is space for capital investment. I do hope there is more capital expenditure towards healthcare as well. And I think 2-3 points that were very progressive and forward-looking. Number one was the emphasis on creating these COEs for artificial intelligence, and health being one of the sectors that will be kind of part of that. And the second thing that goes along with it is the national data governance policy, where anonymized data would be made accessible to private researchers and private entrepreneurs to figure out next generation models using data and AI. And I think this is one space where we have a huge opportunity to lead the world. We are actually right now a little behind what is going on in US and China, but we have all the key ingredients in place as a country. We have the talent that is required. We have the benefit of insane amount of data, just given the population and scale at which we generate data. And we have the processing capacity and infrastructure. Now, what was needed was channeling it into a proper program. And I think this is a very welcome and progressive move that has come at the right time. So really keen to understand how it plays out. The other areas where I feel there's good progress within the healthcare sector is the of healthcare should be a big part of it is the skill development initiative. 47 lakh apprenticeships will be supported by the government. And I believe healthcare skill development is a key national imperative and a huge opportunity, especially as we talk about Heal in India and Heal by India programs of the government. We need more skilled healthcare workers, and I would love to see private players participate more actively in this apprenticeship program. However, the details are yet to come out, how, which sector. So keen to understand that. On the whole, I think satisfied with the budget. A few areas certainly where we would have felt more could have been done, like there's a 8 to 10% increase in healthcare expenditure. Again, always want more. But having said that, at least there is continuity in everything. All the things are, or most of the things are incrementally positive. One gray area in my mind that is, I'm not very clear about it yet, is but there's a lot of chatter about the angel tax for foreign investors. And that needs to be understood better, and probably the right experts, maybe TCM knows more details, but I I feel we as a nation we need to do make it easier for capital to flow in, support the businesses, because that is something that will be extremely important, especially as we want more and more startups to move back to India rather than flip out of India. So that was the one area where there is chatter and there might be some clarifications required. But on the whole, I think a very decent budget.
I was about to come to this. Thanks, Mr. Tannan. Mr. Sundaram, we know that you're the right person here to give us insights about this particular area, gray area, if you can say so. And of course, what other than this was attractive to you?
Yeah, I think overall budget has been very balanced, and they are walking the talk, right? The government is walking the talk in terms of bringing the fiscal discipline, creating a glide path. And this year, despite all the unpredictables that have taken place after the budget, starting with Ukraine war, and all the inflationary trends in crude, it is very, I would say, pleasantly surprising that the fiscal deficit stayed at 6.4, thanks to tax buoyancy. I think that's a very credible thing for the government, right? We were used to a lot of budget estimates getting slipped. This time, at least a fiscal deficit as well as in terms of borrowing, they have been in target. One of the things, and also the focus on long term in terms of capex, in terms of creating the 7 pillars for the longer term, for the next few decades, to be able to get the benefit of India's differentiated growth, to take its rightful position, is very good. But there are some disappointments, especially for our industry. I would say both the VC industry and the startup industry. That is something that there have been a lot of recommendations that have been going for several years in terms of rationalizing the capital gains tax, right?
I was about to come to this, yeah.
Yeah, mind you, I think it is very important that what is being invested by VCs and PEs in the startup ecosystem is clearly going in to create, let's say, new jobs, or take advantage of new technologies, which truly creates GDP, right? While we are being taxed, right? Both in India and in fact, Indian investors. Chirate has raised close to $500 million from Indian investors, and they pay a higher tax compared to offshore investors, right? And we have been asking also offshore investors, between, let us say, whatever is taking place in the public market, right? Where long-term capital gains is 0, or 10% now. Right now, that's this is going into productive asset creation or job creation, this should get a favorable thing. So that has not happened. On top of it, the applicability of the angel tax, section 5627, for investment, which is going to create a lot of friction for the offshore investors while investing, how it will be done. Because there is another regulation by another regulator which says that offshore investors cannot invest below the fair value. But if offshore investors invest above the fair value, the company has to pay tax, right? So, where different regulations are actually going to create a tough situation, right? On top of it, there are a lot of SaaS companies which have global expenses that they incur, right? In terms of their cost and other things. And the TCS of 20%, 5% going to 20% is again a friction point. So when you add some of these things at a startup level, at least I'm saying India-focused companies they operate in India, so they will have presence in India. But SaaS companies, because of some of these reasons, could actually be forced to start looking at, going out of India, whereas we are trying to bring them in, right? And there is still a very high cost for flipping back. I can understand that we can tax them for flipping out, right? But when they are flipping back in, we should find ways in which to encourage companies to be located in India.
Of course.
This is from an industry perspective, but I think overall, considering all the challenges and uncertainties, even coming year globally is looking like there is going to be significant uncertainties in terms of inflation, even the constraints.
Good to know. And I must appreciate your optimism and satisfaction with the budget. Coming to you, Mr. Garg, your opening remarks and what was the most attractive announcement for you?
So I think firstly, I play primarily towards my customer ecosystem is manufacturing infrastructure, and we are obviously part of being a startup ecosystem. So I think fundamentally the first thing which keeps me excited about the positivity of the macro environment that India is able to create amidst all the things that have been happening over the last 3 years of COVID. And I think as a country, we seem to have gotten our act together as opposed to many other countries which are either suffering from extreme inflation, recession, and all kinds of things, right? So I think, therefore, I see this budget more as a kind of a continuation or a top up to already a fundamental sort of ecosystem being put in place. Clearly, this is next 10 years are the decade for India. I think this vision for Amrit Kal and 7 priorities, I think some of these are reflection of the bold ambition that India is talking not only about what are we doing for this year, but even the WEF, if I look at the presentation in Davos a few weeks back, it was all about what are we doing for the next 25 years and how do we not just look at a 5 trillion economy, but a 10 trillion economy, 25 trillion economy. So I think clearly there is a eyes set on a larger goal, and while there is a yearly budget, but long-term strength of the companies of the country is prioritized over any short-term populist kind of a measure. A few things that play out very well for us, I think, as a company. So firstly, I think infrastructure, there is a continued momentum. There is almost 30% plus increase in infrastructure spending. We feel it is also infrastructure is spending every time is a multiplier effect, because you have better connectivity, you are able to get the development into the subsequent cities, so on and so forth. Infrastructure spending on airports, again, these are dimensions which are continuing to enable multiplier for country to grow, more people to come into sort of the employment and getting access to the same employment opportunities as people in NCR or Bangalore and other cities might have. So I think that is one area which I remain very positive and continued momentum. The second one, I think continued focus, which started last year with PLI, but I think even in this budget, there is a talk about if new manufacturing is being set up till March 24, they get access to tax breaks. I think the capex momentum in India has started, and I think this is the year where people will continue to double down on setting up more manufacturing plants in the country, because they have access to both the tax breaks for setting up new manufacturing as well as the PLI schemes that continue to it. I would have expected, and maybe it is probably bound to happen, that there are more and more sectors who should become part of PLI. So I believe that there are still few sectors which have not gotten access to all the benefits of PLI. So I think there is clearly a scheme which is working, and it is working well. So we need to figure out how do we extend the scheme towards capex expansion across all industries of manufacturing. On the startup side, I would say I have been a continuous sort of proponent of the fact, one, obviously budget getting the attention that they should think about startups, think about venture ecosystem. I think it started as a series 3 years back. Before that, there was no talk of startup or VCs in the budget of the country. So I think I remain positive on that dimension. However, I think a recurring request in terms of parity of long-term capital gain for employees, for the ESOP, as well as some of the points that Mr. Sundram mentioned. How do we incentivize more money to come into the startup sector, and how do we incentivize more employees to generate wealth using the long-term capital gain? I think these are two very important incentives, and particularly providing it parity to how the public instruments are being treated, I think is almost something that that should happen as sooner than later, because I think those are two just the important ingredients of building the startup ecosystem in the country.
I agree that the parity was expected, and this will remain the same. And also, this has been the continuous expectation from last 2 to 3 years, and we are still hopeful that this will happen in upcoming years. But apart from this, the positive point is the attention to entrepreneurship, let's say, is huge, is massive, and that's something we should appreciate and we should commend on. Also, FM yesterday said entrepreneurship is vital for economic development, which is good, and that is something which is common in for all of you. Mr. Tandon, what would you say? What is one thing that's common for entrepreneurs in the startup ecosystem coming in from budget?
I think the budget, the one thing that is, as I think Rahul just mentioned, is just the very fact that the ecosystem is mentioned, appreciated, and considered a key part of the national development agenda. I think that's good encouragement. That is always good to have. From a few structural issues that are still there, and they've already been mentioned, these ESOP taxation, long-term capital gains taxation, and et cetera. We really wish they get addressed at some point. Frankly, doesn't even have to be budget to budget. These things are seemingly straightforward and easy fixes if the government chooses to do that. But I think from an ecosystem perspective, it's good to be acknowledged as a key part of nation building. It's good to be mentioned time and again, and there should be continuity, and there should be as much predictability about the policy. That part is, I think, no significant change. The small iteration we need around taxation, I really hope we get there.
I can't hear Resham. Can you guys hear Resham?
My apologies. Am I audible now?
Yes.
Thank you. Let me come to Dr. Bhattacharjee. If you can talk from fintech perspective, yesterday we heard FM announcing credit guarantee scheme for MSMEs with the infusion of 9,000 crore in corpus. I mean, there is a push, of course, for entrepreneurship in the nation as a whole, of course, and there is more attention towards women. I mean, unfortunately, on this panel, we don't have any women on this. It's all gentlemen panel except me. But we look forward to more women participation in entrepreneurship and other sectors too, and that too from very regional to the macro level as well. Dr. Bhattacharjee, your comments on some of the specific announcements related to fintech space.
Right. So actually, first of all, I'd like to address, the presence of women that you talked about. Actually, if you see the budget allocation, so the Ministry of Women and Child Development has got about 7% increment in the allocation. So I think government is giving due care for the development of women, skill empowerment, and so on from that perspective. And also, from MSME, I think the budget very much focused on MSME. So as you rightly mentioned, that credit guarantee scheme of 90 billion in corpus, and also to support MSMEs, a timely payment deduction for expenditure incurred was also given. And then, credit to MSMEs have increased significantly, actually. And the budget, through that is trying to nudge the MSME and the consumer sectors. And that is beneficial for our kind of business, particularly where in the credit space and in the corporate bond market. So three things stand out for us, actually, which are very positive. One is that, if you see from corporate bond perspective, if you see the budget, in that budget, the net borrowing or market borrowing of the government is pegged at 11.8 trillion, which is very much in expected line. So that means that bond yields doesn't shoot up so much, even if RBI keeps interest rate increase to tame inflation. As a result, there would be stability in the bond market, and we'll get to see more issuance in the corporate bond market perspective. Already we have seen, good traction coming up in this market. Moreover, let's go to the credit side, actually. So you see, for credit, the budget was very, the infrastructure was one sector where the budget was emphasizing. And you see the credit to the industries, actually, that has moved up, particularly if you see the MSMEs. It is going to about 30% now. The medium scale industries credit has also been growing at a rapid pace. And more importantly, the large industries are also growing. Now, this is because of two reasons. One is that the corporates have largely deleveraged, and their credit, as a result, their credit demand has increased. And secondly, the banks have cleaned up their books. The NPA ratio of the banks have come down significantly. So, these things are, showing increment in credit. Actually, credit growth is hovering around 16 to 17% now. And if you see the budget yesterday, there was the target for agricultural credit was increased to 20 trillion, actually. So that is a big boost, and agriculture remains a resilient sector and showing a growth of about 3.5 to 4% continuously. So I think these are the positive things for our business perspective. Yeah, so I'll stop there.
Mr. Sundaram, your point of view, there was also enhanced emphasis on agriculture sector, and FM also announced an agriculture accelerator fund for agri-tech startups particularly. And of course, the agriculture credit target increased by 11.11% to 20 lakh crore. Uh, this specific encouragement towards agriculture sector and going forward gradually it will also impact the agri-tech startups, if I can say. What do you have to say, given your expanded portfolio of startups? What would you?
Yeah, no, I think it's a very good focus that is coming in, because we are already investors in 3 agri-tech startups, and we see much more innovation coming there. And that innovation is because of tech, which is able to be adopted at that level. To be able to improve productivity, to get better realization, to give agronomy inputs for the farmer to be able to make the right decision on what to grow, how to grow, all of them. And so it's a very positive development. And also the credit. What we always, in fact, some of our companies, when they deal with the farmers, one of the big thing is the credit availability, right? And just being able to have credit availability because of which they can actually defer their selling of the production to a better price point can itself increase the income. So that is something that's a very positive development. And the way we have looked at it is that, with over 800 million smartphone users now with data connection, and which in the course of next few years will cross 1 billion people, a lot of things which cannot be today delivered in a physical world, like proper healthcare or proper education across the country, on a consistent basis, can actually be done now by using technology with remote participation. We have seen early signs of that. Now, that focus, which is coming in terms of whether it is agri-tech or the way MSMEs are being, the DigiLocker too, where MSMEs can put their data so that will help them do better inclusion for better credit and other things. Those are very good initiatives, right? But I think they need to be also thinking of, while we make long-term investments, how much of it will have benefit in the near term. The benefit in the near term will only be based on the expenditure, which will have a cascading effect in terms of, feel-good factor, which can hopefully lead to the growth coming in. While we came out of COVID at a macro level, 2023 possibly it's going to be larger than FY20. So we are leaving COVID behind and then looking forward to going ahead. I think there are pockets of economy which have still not come back to pre-COVID levels, right? Clearly, the way you can see is that I think middle income and rural have had impact. That is also demonstrated in the form of two-wheeler sales not coming back to actually pre-COVID levels, right? That is the first asset that pretty much everyone buys, right? So given that, there has to be short-term measures also, which can help. I think where some amount of, tax relief, which is putting more money in the pockets of people, is helpful. But I think we need to do more, a little bit more in that sector, where actually demand can come back in rural market, and disposable incomes can go up in the urban markets as well.
With the change in tax slabs, I do understand that this will somehow encourage the disposable income, as you rightly also, Dr. Bhattacharya also touched on this point as well. And this will gradually encourage more spending and spendings from consumers. But the point here is the so to say, the whole environment still remains conservative in nature. People are expecting more uncertainties, more complexities going forward in the markets, industries, be it startups, entrepreneurs, or even individuals. They're all conservative in nature. Talking about LTCG, long-term capital gain, I really do want to understand how this will encourage the domestic capital investments in startups. When we say that, we look forward to more, let's say, involvement of domestic rupee, but with such high complexities or tax on this, how will this flow going forward?
Yeah, so look, end of the day, we have been dealing with Indian investors from the time when there was high, I would say, lack of sufficient knowledge, as well as possibly lack of performance from the industry days, right? To now, actually, people are convincing that this asset class in alternate assets will generate differentiated outcome, right? Better than what public markets generate. So there is interest from HNIs and family offices and institutions in India to be investors in this asset class. which goes into, like I said, creating jobs, creating new businesses,
Of course.
creating future. But they're getting taxed at 20%. They are taking higher risk. It's a liquid asset. It will take, it's a 10-year fund in which they are investing. Average hold period being 7 years. Compared to that, somebody who's investing in public markets, with literally most of it is going to be in secondaries, right? When you buy it from another shareholder, that is not going into the company, right? To create value, to create capex. So what's happening in this case is that they are getting taxed even for domestic investors at 10%. So taking higher risk, taking liquidity risk, people have to still pay 20% tax. Right? So it's actually a friction point.
That's right.
And just adding to that, Mr. Sundaram's point, I've always wondered, like when you look at 100 unicorns in India or thousands of startups, a large part of them have been funded by foreign institutions, not domestic institutions. Apart from taxation and regulatory hurdles and all of that, I think we forget that probably the easiest and the simplest explanation is this differential tax treatment that Sundaramji just mentioned, the 20% versus 10. And I realized it when I started my own angel investing. The first exit, I realized, okay, why am I paying 20%? For a Reliance stock, I pay 10%, but why am I paying 20% here? So that's when it hits you. This is probably the decision that a large institutional investor is taking. And to compound it, you're taking enormous amount of risk theoretically with a startup relative to a large public company in India. So completely echo Mr. Sundaram's point here.
Dr. Bhattacharya, would you like to add something to this? Dr. Bhattacharya, hello? Hi, can you hear me?
Sudarshan, can you hear us?
Yeah, we can hear you, Resham.
I don't know. Dr. Bhattacharya, can you hear me? This is surprising.
Can't hear you.
We can't hear you. His video is okay.
His video is okay, yeah.
Typically the other way around.
No problem. No problem. We'll come back to him. Mr. Garg, what do you have to say about this? Why is this happening? What's stopping them to ease this?
Yeah, I can't speak for the FM, right? That would be inappropriate. So
let's WhatsApp her, Rahul.
And that's my job to push you to speak about it.
The only comment that I will probably make is that, see, I think the startup industry that has two very important dimensions: the access to capital, and then the entire innovation ecosystem we create using employees, right? So I think these two are the most important custodian and important people. Obviously, we have to figure out the product market fit and scale that. But these two are the oil into creating startups. And I think on both places, seems like we haven't gotten to the parity. And there's no obvious reason, given that we have, while we are still young as an industry, but it has been a budget topic for last few years. There's no reason why you would not want to create a parity that a domestic investor should invest confidently into startups. Similarly, an employee who is joining a startup should get access to long-term capital gain. In fact, it's funny, I mean, like, because as founders, we do get access to long-term capital gain. The employees are not able to get it because they join and they take ESOPs. And it almost seems unfair because some of even my leaders who've been working since the beginning, they end up paying 40% tax and things like that. And you're like, it doesn't make sense because there is a vesting cycle of almost 4 years for most of the stock option programs. And then you might actually be selling 6 years, 7 years after. So for such a long horizon of ESOPs being vested and held by an employee, not getting access to long-term capital gain. So even if I would say that the FM was to be conservative, they could say maybe after vesting another 1 year or something. But like, at least start somewhere that they are able to get access to the long-term capital gain benefit. You want a longer horizon, that's okay, but like at least start to have that provision. The ideal case is to get to the parity in both of the scenarios.
Of course, of course. Dr. Bhattacharjee, can you hear us now?
Yeah. Can you hear me?
Keen to, yeah, we are keen to listen to you.
Okay, okay. Yeah, no, I think mostly the points are well covered by the panelist. I think there needs to be a parity actually, to encourage the startups to access the long-term capital gain. So I think the government will think over it actually, and this would be one of the ways actually to encourage the startup ecosystem of the country. So I think, yeah, so I think there needs to be a parity. I agree.
Good to know. Let's come to the gray areas. Of course, this was the biggest one for both of the communities, let's say VC industry and the startup industry. This was the biggest expectation when I was doing plenty of stories, and this was the only major common point in all of the stories, but still it remained the same for next 1 year, if I can say. But fingers crossed, you never know. But what were some of the major gray areas and what could have been done better? Would like to listen to your viewpoint. Who would like to take it up first? I can see Mr. Agarwal smiling.
It's a
Go
tough
for it.
question. It's a
I
tough
know.
question. It's like giving a report card to and marks to FM. But hey, who are we to judge the complexity?
If you were FM yesterday, what would you have been done better?
Look, I can again talk only about my sector. That's where
Please.
I have a little bit of expertise, 1% expertise, if you will. So
Please.
I think there were lots of positives, starting with the fact, and this has been a constant theme for a number of years now. Transport infrastructure investments. Under Mr. Nitin Gadkari, MORTH is one of the most prolific ministries, I would say. And they've been constantly creating roads in India and of course creating infrastructure. One key thing that kind of jumped out at me yesterday was the establishment of picking up 100 infrastructure projects to solve for last mile connectivity at our different ports and stations and whatnot, right? So see, all of this augurs well, because more roads simply means more cars for me. And more cars is directly great news for me, because every time a new car is sold, it becomes an old car, and ideally old used cars. So for me, anything which encourages more cars on the road, I love that. So I think that was the most interesting aspect for me. And given how small we are, insignificant to the Indian economy, our wish list in automobile sector is also very tiny. I think one of the key aspects that we've been requesting as an industry has been just more uniformity around GST rates. At the moment, it's a little more complex than it should be. And then I think another point that I struggle with as a founder of a startup, we have crores of input credit lying with us. It is my working capital that gets blocked, but there's no provision to get it back from the government. And I'm still a little bit away from getting to those profitable zones. So, I don't know if all the startups are in that zone, but yeah, I'm willing to bet a large chunk of Indian startups are sitting on a ton of input credit. So my small, tiny wish list is if government can think about releasing our working capital blockages. That would be more industry specific, of course. I mean, this is not even actually industry specific, this is in general. But from an auto perspective, amongst all the various aspects, we are looking for just a little more uniformity in GST rates. You're on mute, Resham.
I'm juggling between two devices and this is making me crazy. So for you, it's more roads and more cars on those roads, huh?
That's it. Yeah. And there's obviously, as Rahul mentioned, there's massive macro headwinds anyway helping us as India GDP improves over the next decade, the Davos presentation, 25-year plan. All of that is great news, because at some point cars start becoming necessity for a family in India. And the moment they buy a new car, I cheer because I know 3 years or 4 years later, he's going to sell it to me.
Good to know. Good to know. And just adding to it, I also admire Mr. Nitin Gadkari. I also love him, the way he
Yeah.
speaks and the way he
I've not seen a
presents.
minister like him. Like, I mean, just prolific. I haven't dealt with finance minister or any other ministry actually, but relative to the past ministers, he's just different. Like he works like a startup founder. He's just super speed.
Coming to you, Mr. Garg, what were some of the gray areas for you, and what could have been done better?
No, I think there are many of the asks that we spoke about on the startup side, which obviously we would have loved to see. But as startup founder, we never gave up. There's going to be another budget. Hopefully, there is also after budget amendments, which I've seen sometimes happen. So maybe some of these inputs go into that. But again, I would think outside of that, I think continuing to double down on the PLI and the manufacturing growth in India. I think I believe is very, very important for the country. I don't think budget is the only avenue for those. I think there are other avenues where some of those schemes get generated, and then because for the kind of young population we will have over the next 10 years, it is very important to create mass scale jobs. And we can't just rely on services sector alone to do it. So I think manufacturing will remain a critical pillar, not just for the economy and GDP growth, but also for providing jobs to so many young people that will be coming in the next 10 years.
It's important to pay attention to job creation just after, especially after the bloodbath of happened in, I mean, many sectors, especially in edtech. It's really important to focus on job creation. Dr. Bhattacharjee, your views, specific to fintech, and of course, if you have, I mean, have inputs for other sectors as well.
Right, right. So yeah, so first I'd like to cover, from the standpoint of the budget, if you see, it's more or less, like it has done almost possible given the headroom that it had. It's tried to touch upon every section and every society for that matter. So probably, what further could have been done was that the rural development allocation was brought down actually. So it was brought down by 2.1%. And also, like, since you talked about employment and employment generation, if you see the rural employment guarantee scheme, that is Manrega, so allocation to that was also got down by 32.9%. So I think probably government is expecting the fact that next year the labor market condition would better, and so much allocation in the schemes would not be required, given the fact that India has its strong domestic fundamental, and the sectors like services and these sectors are improved, manufacturing also are improving. So I think apart from that, I think it was fine. And for the fact that, probably for startups and for fintechs in particular, I feel some more nudge would be better in terms of, giving like probably setting a kind of SEZ kind of thing in large scale basis across many cities of the country, then providing tax incentives, more tax incentives, to encourage and to set up startup businesses in the country basically. So that will, India is already a startup hub and one of the, topmost holds one of the top ranks in the startup ecosystem. So I think with the right kind of probably with some more tax benefit, tax incentive, I think India would be able to attract more startups. Yeah.
Good to know. Good to know. Mr. Sundaram, coming to you. Of course, agri-tech and millets. Shri Anna, we saw the great emphasis on that too, and it was surprising for me, and it was a huge thing for FM and for the whole budget yesterday. Mr. Sundaram, what are some of the sectors that will get benefited more? And what do you have to say? What could have been done better? And what were some of the gray areas in your opinion?
Yeah, I think there are a few things that have been done, like even for startup ecosystem, saying that tax exemption can go for 10 years. But I don't know, most of the startups are not turning profitable in 10 years' time. Or even if they are going to be there towards the end of the period, they have to wipe out the accumulated losses before becoming taxable. So how beneficial it will be, I don't know. I hope the startups are going to be in the profit path much earlier than the current pace at which they are turning profitable. It'll be good because I think then their ability to raise capital, their ability to even go public is going to be very high. Public markets in India, at least, will be substantially driven by profit orientation and increasing profit while increasing the revenues, right? So that is one thing. So I don't know how much benefit. Earlier it was 7, it has gone to 10. So very few of them will be able to take the benefit. One other thing that not necessarily directly linked to budget, but I think somewhere along the line, budget has to start thinking about is budget or other ministries, is this whole focus on what PLI we are doing. It's a great thing. Right now, thanks to geopolitical issues, there are every manufacturer is looking at China plus one. The fact that somebody like Apple has all 3 vendors have started in India, rolling out and then exporting out of India is a great initiative. Most of it has come through PLI, which is good. But where I am coming from is that instead of being PLI, it should become value. It should be linked to value addition. The incentive should be linked to value addition. That's very different from just based on the production value.
Yeah.
Because I just read an article in calendar 22, India had a trade deficit of $101 billion with China. And it has gone up in the last 3 years since the Galwan clash, right? Now, I think India has a leverage being the largest market. And we are still allowing a lot of exports to come in from China. And that is actually increasing the, deficit for India, trade deficit. That I don't think we should allow it to happen. This is a great opportunity where the whole world is looking at India, and we should be looking at saying that how can we take advantage? Just like the indigenization, which used to take place maybe 30 years ago. That is why today we have a very vibrant auto market, right? I mean, which is exporting to the world. Or specialty chemicals, which is exporting to the world. I think it is important to focus on now the new age businesses, manufacturing, which is a very small percentage of our GDP, only 16%. And there is a stated objective of taking it to 25% in the next 10 years' time. Our journey from, say, 3 trillion to 10 trillion, we should look at manufacturing because that can also generate a lot of employment, right? So all of it together has to be looked at in a holistic way, saying that how India can take advantage of geopolitical, move to value addition based incentive, and create jobs.
Good to know. We will have now to give it a full stop. There is another panel after us, which will talk about job creation. This is panel with all CHROs. Just before that panel, I would like to conclude with my 5-point summary. What I have captured from you: more uniformity at GST rates, working capital blockages. We need ease at that pace. Of course, a push at manufacturing growth and better rural development allocation, just to give it a boost from a holistic perspective. More tax incentives for startups, and of course the ever remained parity in LTCG. But of course we must appreciate, and we sincerely do praise our FM and the government for this budget. With the current geo-economic challenges and uncertainties, we managed to get this good, very balanced budget, which created a headroom for every sector and industry. Thank you so much, everybody, for your time. Thank you so much for joining in. It was an amazing and insightful panel discussion. Thank you so much.
Thank you.
Thank you.
Thank you.
Good afternoon. Hi,
Hello,
Praveen.
everybody. Am I audible? Hi, Andy.
Hi. Hi, Vikram.
Hi,
Praveen.
hi,
Hi,
Andy.
Vikram.
Hi, Praveen.
Hi.
Hello.
Actually, your tagging is wrong. I don't know why I'm showing as Vikram Vector as well.
I thought so.
Good afternoon, everybody. PW welcomes you with Budget with PW Talk. We welcome everybody on board. Mr. Bector from Piramul Group, Mr. Menon from India First Life, and then we have Mr. Anand Roop. He's from Deloitte. So everybody, thank you so much for joining us and taking out time for this discussion. Just a brief introduction of what we'll be talking about. This is basically, a discussion on post the budget, what exactly will be the job market scenario. Just to give, a brief backdrop of what exactly the budget talked about yesterday. So Union Finance Minister Nirmala Sitharaman, she presented a union budget for 23-24 in Parliament yesterday. The minister has listed various measures and policies aimed at transforming India's infrastructure, easing compliance, and attempting inclusive development. Well, it's a very mixed belief. There are some people who are very happy with the budget, while some still feel that there have been discrepancies. But on the whole, in this 23-24 budget, the government has taken a big and a welcome decision, of exactly giving out the much needed relief to income taxpayers this year, which is believed that it will strengthen the employee class spending power and will also lead to an overall positive sentiment in the market. Let's begin with Mr. Ghosh. What exactly is your view on this year's budget? Basically, your takeaway, and how do you feel this year's budget has been drafted and finalized?
Thank you for inviting us for this. From our perspective, I think, and I'm looking at it purely from a jobs perspective more than anything else. And I would say that there are two triggers that we would interpret this as. One trigger is to say that there is a 34% increase in capital outlay. When you have a large capital outlay, it should translate into job creation down the line. Obviously, the job creation doesn't happen in a moment; it happens over a period of time. But larger capital outlay essentially means you create more projects, more formal sector employment also goes up. So that's one positive from this. The other one is primarily around consumption, because what you're also saying is that if you are putting in reducing tax burden, like you were saying, on people who choose to adopt the new tax regime, that's clearly a reduction in the tax for at least certain categories of employees. You're essentially also putting in and driving up a little bit more from a consumption expenditure perspective, which increases the the focus on the consumption focused industries. So these are the two factors that will drive up potentially employment in these sectors. Look, I feel there's also a lot of talk around the skill development design. I mean, those are incremental, and this will continue to happen. There will always be some level of changes, etc. that will happen. But if
so
these
Pradhan Mantri's new scheme of 4.0 upskilling, do you think it will help in creating more job creations for newbies as well as for people who've been, laid off as well?
So the fact the job creation, it's a demand supply thing, right? By this is a supply side thing, action that you're improving quality, but there's also has to be a demand side. So we have not had supply side issues, and we have supply side issues, but these kinds of government initiatives will always keep helping supply side more. It's about saying how much can you make the demand side absorb these new skills that are coming into the place. I think the government's role is a lot more in creating the demand side than in the supply side at this point.
Mr. Menon, what's your view of the same? How happy or how discontented are you with the this year's budget, or you feel it's pretty much in a way that it has catered to all segments?
Yeah, thank you. Pleasure to be here in this August group. See, basically, I would put it this way that the look forward to is India across the world. Of course, world across financial year 24 may not be as good as possibly what it would have been about a 5-year back period, right? At times, world across countries are grappling with inflation. There could be job losses. There could be recession. But when you look at the outlook, India per se is expected to grow at about 6 and 6.5% at least for financial year 24. Now, with that background in mind, some of the initiatives that what government has proposed for financial year 24 is actually making sense. Andy actually touched base on the capital infusion that the government is doing. Some of the other sectors like travel sector is being given some kind of a boost. It actually feeds into various sectors like hotel, airlines, the formal sector plus the informal sector actually comes into the picture. In some way, the taxation slabs have got revised. Government is actually trying to break away from investment rebate and taxation. So most of the people would now get pushed on to, let's assume, the new tax regime. So overall, I feel it is a balanced budget. It is a budget for us to stimulate the growth at about 6.5% that the world is talking about. When the world may not see, many of the, what you call progressive practices around because of the economy itself. But I guess here we are in India, which possibly will help the job market to that extent. So overall, I'm not pretty disappointed. Neither I'm too excited about it. I'm actually excited about India growth story more than the budget.
But you very categorically have pointed out that this kind of budget, that the one that's been drafted, it will give a 6% increase to India's economy. Is it something that you are telling by experience, or you actually feel that the tax rebates and the kind of economy boost that this budget has given will actually lay in such results?
Absolutely, it will. Because of the fact that it has been all through last few years. And if one were to look at it, we are back to pre-COVID level almost, and the investment that the government has done in terms of the infrastructure specifically, again, that kind of leverages into a lot of the other sectors, has really helped India to be stable. And even if you look at this year as well, there is a lot of investment that is going into, especially, capital infusion in terms of infrastructure investment. It will help the economy to do well overall. Others are like a tax bracket stimulation, etc. Those are, small time enablers, which will help, the job market. But as Andy mentioned, the demand that, to a certain extent has been created by the government through this budget, and the supply will make sure that it catches up to the demand. So overall, I think it's a very balanced budget in my view.
Thank you so much, Mr. Menon. Mr. Bector, over to you now. What is your view of this budget on a holistic basis? You can talk about from pharma segment as well. But then, and where do you think is exactly the loophole as well that we need to fill in?
Sure. I think the beauty of going last is that most of the good things have been spoken, and I can easily say ditto, and that will be what people will learn. I think.
So that's why I categorically said, why not hear from a farmer perspective?
Sure. I think the first thing I want to say is, first of all, extreme gratitude. I'm a hopeless optimist. So I think the fact that a budget galvanizes us all Indians to think about India is a great thing. You also invited us here. The papers are full. So I think this is that time of the year when all Indians, the bulk of Indians, get really excited about India. And I think to that extent, kudos to the government that they have a pulse, their ear to the ground. They know exactly what is good for India, and therefore accelerating. So we've spoken about, such a high outlay. I think almost like a 30%, so 10 lakh crore of capex. what will that do for India, especially the manufacturing sector, and within that, the Atmanirbhar Bharat movement for the pharma sector. We are already considered as a pharmacy of the world. And since most companies around the world are thinking of China plus one strategy, I think I would really give kudos to the government to increase the outlay, because not only is it good for the sector, but I think manufacturing is good for the country.
Right.
Similarly, if you see the pulse on the ground, we are overall seeing the implementation of 5G. So, for example, you spoke a little bit ago about the Prime Minister's, Suksham Kaushal Vikas Yojana, the 4.0, where we are looking at 30 new skill centers,
Right.
really around new skills. These are all around AI. They are all around the new skills which will benefit, because if you have to get into 5G implementation, we can't do it with 4G skills, right? So I think
Right.
the fact that there is an outlay for these new skill centers, of course, it will boost the supply side, but clearly there is provision for about 3,700 crores around that. So I think you are seeing both on the manufacturing side and also, I think, on the AI and newer skills, there is an outlay. I think the third and the most important thing, it was spoken in the previous panel, is, see, India, the bulk of the business is in the medium and small enterprises. So the fact that I was just seeing that now we have easier collateral-free guarantee schemes and more credit available to the sector,
Right.
again will spur a lot of employment, because clearly, as we know, the informal sector is the largest employer. So how do the informal sector, the farm sector, the MSMEs, how do they grow? Only then can India grow. So I think looking at these three things, manufacturing, IT and services, clearly the MSME sector, I would say, at least to start with, these three are great initiatives to bring in more jobs, create more employment. Andy has already spoken about better earnings, etc., to boost consumption.
Thank you, Mr. Bector. It's a very holistic view of what exactly the budget spoke about. Moving on to the next segment of this talk, it was clearly mentioned by Mr. Bose also that, now we are, or the government is promoting, tourism as well and thinking of creating job opportunities within that segment. But how, in your view, is government's decision to take up the promotion of tourism on mission mode, will open up newer avenues for the people who've been laid off as well. Let's not just think about creating new employment opportunities, but we also need to think about the fact that there have been thousands of people who've been laid off this year as well. So will it also give a gateway for them to explore into a tourism segment, or do you think it is only for the newbies or the freshers that are just passing out of IITs and IIMs?
But tourism as a sector doesn't actually cater to the top-notch talent base, right? I mean, I'm making a very it's a value judgment, so I won't I'll be careful when I say this, but I think tourism is so accommodation. Let me broaden tourism into saying hotel, restaurant, the tourism, travel services as an industry. All of this put together is an industry that does not have very high entry barriers. So in the sense that a lot of different kinds of skill levels can come and join and give this kind of a workforce. Also, if you look at this workforce, this is actually a segment that had a very that was hugely impacted over the last few years, where people lost jobs in these segments.
Right.
So pushing this segment further, you will actually start bringing back a lot of people who might have actually been laid off over the COVID period.
So do you think boomeranging of employees will happen more in this segment? People who've actually been laid off and were affected due to COVID, and now they'll be just bounced back and asked back to come in because, there isn't, as you rightly said, an entry barrier issue with tourism.
Yeah. Also, I absolutely, because there are two, three data points around this. Number one, look at how the hotel industry, the quarter results that have come out for the different hotel companies in the last couple of weeks. If you look at those numbers, they're extremely good numbers from across the sector. Second is, this is also a sector where over the last 6 months or so, you've seen a resurgence in the employment level. This is a segment that approximately has about 1 million employees in India. And you're seeing that number gradually go. It had gone down. It's coming back to that level, about 900,000 or so at this point of time. So you are seeing the fact that this is going to the focus on the segment is improved. The outcomes of that the segment is able to provide from an employment perspective, value perspective is improved.
Yeah.
And this is also a sector which is going to be heavily. India is over the last, if you look at the last 20 years, we have tried to build up tourism because we all understand that the potential for tourism is much bigger than what has actually been explored in a structured manner. Given the size and breadth of our country, given the fact that the ocean on three sides, mountain on one side, etc., there's a lot more that you can do with the country, the history, etc. So so per se, this industry needs a boost, and the an employment boost is only an outcome of this. It will automatically happen when this industry gets a boost. Will this industry start hiring the same number of people that manufacturing can potentially hire? Obviously not. The IT services, manufacturing, these are the larger segments, structured agriculture. These segments will attract far bigger numbers than this industry can. But this industry can at least make back some of the losses that it has had in the past.
And
What's your view,
Sugandh,
Mr. Menon, on this? Oh, yeah,
Sugandh, if
Mr.
I may
Menon.
add,
Sure, sir.
see, I think let me take off from where Andy left. I think what he's saying is no one sector can actually change the fortune. I would expand this conversation a little bit. See, if you look at, in this budget, again, states, especially for developing tier 2 and tier 3 cities, are being given 50-year long loans. See, what happens for tourism to develop, you have to have better roads, better infrastructure, safer, places how people can travel. So look at how the government understands that there is an enabler called infrastructure, which is needed on top of which an industry called tourism can sit. So I think that's the point being made here, that no one sector will change the fortune. I think first of all, our cities, roads, infrastructure, safety, all of that has to improve, which is what the government recognizes, which is why such a strong focus on urban and tier 2, tier 3 city development has been given in the budget. I think, of course, it's just not tourism, but even if you see during COVID, many of us dreamt to be working from Goa, right? So I think we've seen also people moving back to the cities, but not finding the right infrastructure, not finding the right resources. So I think there is an acknowledgement of other things like homestays and all of that, which will really aid the sector. So clearly, the tourism sector will get a boost, but it will have to ride on top of the development of the infrastructure which is envisioned in the budget.
Yeah, because infrastructure basically will be an enabler in order to boost, tourism. Just to sum up what exactly you mean, Mr. Menon, what's your view on this thing?
Exactly. I mean, we are also looking at Indian consumers as somebody who also would undertake travel and tourism, right? I mean, why is there a need for Indians to travel abroad if you're able to get the same experience within India, right? And there's a huge market for that, right? Combined with something like a hybrid work policy, etc., which Vikram just now mentioned. Now there are organizations which allows that, and there are people actually operating from different geographies, right? Whichever is comfortable for them. Plus, according to me, travel and tourism is an industry where it actually propagates entrepreneurial mindshare, right, or mindset. Correct. A lot of people can start something on their own, even if it meant, it is small to start off with, right? And that is one more initiative which the government is actually trying to kind of put in as a part of the budget perspective, where the more entrepreneurs come into the system, not only they are self-employed, but also they give employment opportunities to people around, right? Why should it always be, big formal companies to give employment? So there are so many, small-time SMEs, etc., who also provide employment opportunities. And entrepreneurial, mindshare is something which the government wants the youngsters or the millennial populations actually to take it up, right? So opening up and promoting travel and tourism as an industry will help the employment opportunities to
boost,
go up. It also, as I mentioned, a lot of other industries actually feeds into it, be it hotel, be it airline, be it industries like where even railways for that matter, plus some kind of an infrastructure which the states will have to invest for it to take off. So I think overall, I mean, it's a good initiative, and one could see a lot of traction going forward as well.
All right. Experts these days claim that today employees are not just looking for high-paying jobs, they're also switching on to sustainable jobs and exempting basically startups from their list as they're not a credible source of job security. How, in your view, can startups secure their talent base in this way? Because if actually it is out in market that, nobody or an employee base would rather go for a sustainable or a more secure job, but startup is not giving them that security. So in order to boost the startup segment, how can an employer or an employee base from the mid senior level or from a government perspective can actually boost the startup ecosystem if the talent is not ready to stay with startups? My question is to Mr. Bose.
Again, my view on this is, and I'm sorry if I sound flippant on this, but if you look at the last 23, 24 years, ever since the dot-com bust of 2000, this has always been the case. The dot-com bust happened. Everybody said we should never go back and work with whatever it was called, webvan.com or anything like that. But by 2007-8, everybody started going back and starting with all the dot-coms that there were. Everybody said that we don't want to work with investment banks after the 2008 bust, but people went back to that sector. You had similar stories in 2011-12 when we had a slowing down of funding in India. So it's cyclical. There'll always be a period of time when people will say that this is not the greatest place to be in, and then after a point of time when things stabilize, people will head back. It's supply, demand, and it will meet whenever the price is right. If you're willing to pay me as much, if I feel that there is a potential for me, I will go back and work there. The important thing about startups, and I'm sure everybody will agree with this as well, is that if you cut through the chase, the entire picture, it's like startups in India, and as I'm quoting the economic survey figures, employ about 9 lakh people. So in perspective, it's a very small number. So it's not going to matter. The population of India, there's 48, 49% is the working population ratio in India. So compared to that, 9 lakhs is nothing. So it's not going to be a challenge. I mean, if from 9 lakhs, say 50,000 have been probably affected, 50,000 jobs have been affected, to get 50,000 jobs back or to get 1 lakh jobs back, it's nothing for this industry.
See, it's not about retaining people. It is about retaining talent. Of those 50,000 people, if actually it is, it makes up the core talent of few startups, then how do you think that they're going to sustain? They'll collapse over time.
No, I agree. And I think it's better answered by Vikram or Praveen, because they're actually running organizations where they're attracting people. I can only speak from an armchair advisor, but anyway, I'll actually hand over. It's probably better that they answer this.
Mr. Bector, what's your broader view onto this?
See, startups have a huge benefit, and I think we should also, in all these years, one has realized we should dissect the data, and there are startups and there are startups. There are startups which are booming, and there are startups which are not. So, if you look at, if you look at data from around the world, now, the startups which are booming is green tech. Now, we know the emphasis on ESG. That's where the world is going. The startups which are booming, again, some of them in the fintech. Look at the number of digital transactions we do. I think, while there may be some areas where there is bust, similarly, agri-tech, if you look at, we are an agrarian economy. How do, delivery of, fertilizers over drones, we all receive videos. So I think one shouldn't paint the entire sector with one brush. I think we should look at the finer cuts of which startups are going bust and which startups are booming. And you will certainly find that there are huge green shoots. Some of these 3 startups, sectors I spoke about. And therefore, you will find people will, as Anandarup mentioned, people will move out. We are certainly beneficiaries, especially on the digital analytics talent. We are huge recipients of such talent, and we find a lot of talent is coming in. And large companies are also today incubating startups. They're incubating tech platforms within large companies like Piramal, Tatas, etc. So you'll find that there is a lot of talent which is coming in. We are also partnering with a lot of startups which don't, and sometimes the large companies, don't have that technology. So you start, there is a certain benefit of these startups, but I would just say, dissect the data and look at which sectors are really going bust, because there is a lot of, really good quality work happening in some of the sectors.
No, I
And
completely agree. Even in the corporate segment, if the layoffs are happening on full spree, it is basically more in the IT segment than in any other corporate segment. So very rightly, you've pointed out that we need to actually dissect on what kind of startups are not doing well. Maybe, do you think that the mentors like you, big industries can actually aid them, help if certain kind of startups are taken into consideration that, this is a segment that is not able to boom? Could be talent crunch, could be anything. But do you think in such times, biggies like you should actually handhold them in order to sustain the startup ecosystem as well?
like I said, we are already doing that. Some of our,
Okay.
especially on financial services, we are looking at and we are hiring. We have a technology center in Bangalore. We're already hiring a lot of talent from the startup ecosystem. So and
Okay.
in some cases, we are also investing in smaller startups. So that is already a process.
Fair enough. Mr. Menon, what's your view on the same? How can you actually picturize the situation and could be your solution to it?
Okay, so basically, what does a startup do to an individual or an employee is to kind of completely upskill the person, right? Quickly, right? Because in a startup, you're not restricted to just the JD that has been given to you. At times, it entails that you need to manage the show end to end, right?
Right.
So by default, by the design of a startup, you would often see that people actually get much upskilled or upskilled much in a much faster way as compared to that of the person working in an established, company. Now, so that would have happened parallelly, right? And when we talk about, employee experience, one of the most important aspect of an employee experience itself is a job security, right? Without the job, what kind of an employee experience that the company can give, right? So there are two aspects there. Of course, a startup, they will have to first look at hiring, even if it is slightly conservative. It is always to hire less instead of hiring more and letting people go. So that is one aspect. The second aspect
Sustainable
is
hiring, basically.
yeah, absolutely sustainable hiring. The second aspect is the fact that because people have got exposed to a startup environment, in case if the company doesn't do well, that talent is available for others in the market to poach from. Okay, so companies like Vikram mentioned and some of us, actually we hire people because some of the roles are completely industry agnostic. And if at all I see somebody having a startup experience, I get very excited about the talent and about the experience that the person would have got. So I'm not in a way suggesting that job loss to one sector is actually a boon to the other. But, even if there are job losses, I guess, the employees there, should be able to find a better job, or rather a job which they are seeking elsewhere as well. Because the ecosystem has automatically created that upskillment for an individual. And even startups, for that matter, they will have to look at end-to-end employee experience. And as I mentioned, that job security is the most important employee experience that people would want to kind of have it in their kitty, right? So conservative or rational hiring to begin with, and make sure that you have a business sustainable model which will help the company to grow instead of being a fly-by-night operator.
Sustainable hiring basically is the need of the hour. We've heard that in various conversations as well as seen in various reports as well. Talking about the unemployment level now, it has stood at 9% as of December 2022. Union Budget 23 suggests measures to focus on sustainable employment generation now, self-employment and micro-entrepreneurship to revive the job market. It has actually become the basic agenda. Even this year's Modi's budget also focuses on many aspects and schemes in order to create job, get back to the job creation level in the market. Still, youth employment, continues to be a major challenge across all groups. Mr. Ghosh, if that is a sectoral problem, let's say, of certain sectors, and very rightly, Mr. Bector said that we shouldn't brush away the whole scenario with red, and expect and think that, everything else is going haywire. But there must be certain segments or certain sectors, basically. So why still, even after having, it is not the first budget that, the PM is introducing few upskilling measures and natural schemes. But why is still youth unemployment a major challenge across all groups?
Why is it a big challenge? It's a very big question. I don't know if I have a clear answer to that, but I can give you a couple of data points that I think will. So the 2-3 data points that everybody looks at, right? There's the labor force participation rate, which is an important aspect to determine this entire thing. Labor force participation rate in the 2020 to 2022 period was in India had dropped below many sub-Saharan countries, many of the what we would call the low-income countries in the world. What we see in the economic survey right now is that the labor force participation is back to 55% of so aggregate, female plus male, urban plus rural, all put together. Which essentially means that you at least have people who want to come back into work, which in itself is first a fairly big deal. You had a situation where people didn't want to come back to work. The second thing that we are seeing now is the fact that there is the female level labor participation, and if you split that between male and female, the female level labor participation rate is still lower, much lower, 27%, 28%, something like that. Male is over 75%. What that would indicate effectively is that at least in the urban male population, you have pretty much 80% of the population that is willing to go back to work. A very similar representation for workforce participation, which is how many people are actually working. I would say the numbers have improved. Can there be significantly larger improvement? Yes, but the numbers definitely have gone up. Why are the numbers going up at the rate at which all of us would want? Is fundamentally because the core industries that hire in India, the 3 core industries that hire, right? There's construction, there is agriculture, let's keep it aside for a moment. It's construction and manufacturing. Right? That's where the bulk of employment eventually goes. And after that, in the more educated groups, it is IT, BPO, etc., then you have the entire. The industries that have largely been hiring for the last few years has primarily been industries which require some level of higher education qualification. That's healthcare, education, and so on. These are segments that are going up in demand. Manufacturing and construction has remained flat or has come down. Hiring in these industries has remained flat or down. That's naturally had a downstream effect in terms of how you see people getting hired. So you will not see a problem in hiring or in employment levels of people who have post graduation degrees. I mean, who have crossed the graduation level. Their hiring is employment is not a challenge. The problem is people who have only secondary education or haven't completed their graduation. They are not getting hired as much into manufacturing, which has become more complex. The kind of machines that you're using, the kind of capability you require has become more complex. So they're not getting jobs there. The industries that can hire them are not growing. Traditionally, the industry that could have hired them would have been construction. That's not growing as much.
So do you feel that certain policies that have been devised or actually provided by the PM will actually help them also get upskilled people who are not basic graduates, and those of you who think wanting to get into the manufacturing segment, but they're not because of their lack of literacy as well as skilling. So do you think such skilling initiatives will actually help them upskill?
Absolutely. And that is, but important to understand that this doesn't happen in 1 year. This will take at least 3-4 years for it to start having an impact in the actual numbers of people getting employed.
Okay. Mr. Bector, what's your view on the same?
I think Anandarup has answered it. I think the upskilling is the answer. I think if I was to give an analogy that remember the problem with automation. Suppose farms get automated and you have drones delivering fertilizers and doing, in the moment irrigation, then you don't need so many farm workers, but you need
Right.
drone builders. So the point being made is, are the farm workers able to upskill and become drone builders? And that's the big chasm, right? So you have to upskill, and how much can you get upskilled? Those jobs are getting upskilling is needed, which is what is acknowledged in the budget. But I think, and that's the intent. And I think now we have to act on it and get people who are skilled. Otherwise, our digital, rather the dividend we call the demographic dividend, it'll pass us, because if we don't rapidly upskill, because change is happening so rapidly. And that's why, to your question,
Right.
unemployment is there, because with the automation of factories and farms, you need lesser people to do the same. And now, as we are also looking at chat GPT and all of that, even in coding and a few other areas also, we might just need fewer people, but we need people who can write the code which will train the chat GPT. So I think the whole upskilling is need of the hour, and rapid upskilling.
We actually need upskilling in the way that, we can upskill the latest technology as well. You rightly said we need coders to, help the technology also get upskilled. That is when it will help others. So, Mr. Menon, what's your view? What's your take on the same? From what their view is, I still feel that there is apprehension in minds of people, those who are not being able to get upskilled. So, how do you think, or do you think will it help or not? The government's upskilling initiatives, do you think it will create a boost in the economy wherein people or women who are not able to get upskilled, or if their participation is as low as 27%, what Mr. Ghosh said, do you think the numbers can go up? Of course, not overnight, but do you think such initiatives or such skilling schemes will actually give them a boost that now they have an open forum to learn?
Certainly, because the problem with upskillment is the fact that you do not know what is going to happen in the future. Most of the time, the upskillment happens by looking at how the market is changing today, right? But the world is changing at a very rapid and dynamic pace. So one wouldn't even know that what are the kind of skill set that would be required, say 3 years down the line. We may know that what are the skill set that would be required maybe 1 year down the line, but what happens to 3 or 5 years? And that's the challenge, I guess. But it is such a challenge that you can't do away with it, right? And constantly, as an individual, one has to constantly keep upskilling. From the government side, of course, they have come out with the skill development programs, etc. But more or less, when I look at it, it's to a certain extent, as a part of skilled labor upskillment. That is what is happening in terms of technology upskillment, in terms of a lot of this integrated fintech advancement, etc. I think one has to really take a step back and look at saying that, okay, how is the world going to be 5 years down the line, and what are the kind of professionals that we would require in this system for us to do well, right? So that's one. Number two is that in the manufacturing sector, there is a lot of automation that is happening. Now, of late, in last about half a decade or so, one would see that the products that is getting generated out of India is best in class, which possibly half a decade back was not the case, right? So this so-called manufactured by Indian products are now getting, it's competing with the best in the world. Which essentially means that there is some, exports that can happen in the future. With that, there could be a possibility that, the employment actually can go up along with the automation. So we do not know what the future has in store for us. But fact of the matter is that we have to be constantly at it. We can't kind of take off the pedal. Think about what the world is going to be in half a decade and start investing in it right now. So from the government side, make it make it as a prominent push from their side, and as an individual also we need to look at how the world is going to react in half a decade and constantly keep asking us the same question and keep upskilling. I think a combination of these at various levels possibly will help the cause.
Fair enough, sir. Now that we have a clearer picture of how the upskilling of Modi's scheme will actually help people and the employment will go hand in hand. Now comes the segment of how will the personal finances be led with new tax rebates offered in this budget? How do you think it will impact the management of personal finances of employees? Those expecting a steep appraisal hike from 9 to 15%, according to reports, how do you think their needs will be achieved in this year? Or do you think it is still a fad wherein the numbers may vary? And with terms of appraisal, do you think it is something which is across the segments that will actually help them manage their finances well? Mr. Ghosh, the question is to you.
So this is that time of the year, right, when everybody starts talking about these numbers and looking at it with belief/disbelief.
And some of us, Andy, look at you to predict so we can take the right decisions. So no pressure.
and predictions are predictions. Eventually, they're not reality all the time. But the fact is, this time, obviously, given the economic conditions, given the fact that job market is not as heated as it was last year, you can expect the fact that there will be lower increases for people across the board. What's happening again, going back to something that we were discussing earlier, there are some parts of the economy that are doing very well right now. The services sector is doing very well. I look at it to say any high touch industry is doing very well. So be it travel, be it tourism, be it hospitality, healthcare, whatever, all of those high touch industries are doing well. Low touch industries, which were doing well last couple of years, have actually come down a little bit. So and manufacturing has broadly been stable. And if you're getting capital outlay, et cetera, right now, then obviously you can expect more money in those segments. So broadly speaking, if you are looking at typically in India, we've all broadly settled to the fact that the average increase will be anywhere between 9 to 10%. It doesn't go significantly, unless it's an awfully bad year like COVID, et cetera, or it usually doesn't go below that. Chances of it going significantly above 10 is also not that high. So if you take a 9 to 10% range, you're broadly saying, and if you take a broadly, again, 6% type of an inflation, you're talking of a 3% adjusted wage increase. On top of that, what you're also seeing is that you're approximately 4 to 5% reduction in tax. So net increase is about 8% to that extent, which I would say is a very strong push towards having people consume more and so on.
Okay, Mr. Bector, what's your view of the same? Do you think, the reports that claim that 9 to 15% of increase, the average increase is what employees are expecting this year? Can employers match this expectation?
I'm not sure where the 15% is coming from, but I think certainly in the 9 to 10% range. And for a conglomerate like ours, I think we also have to look at the sectoral, what's happening in the sector. For example, in the pharma sector, there are cost pressures. Some of the export sectors, whether it is IT or pharma, where we are dependent on the demand from, let's say, the US or the rest of the world, certainly there are some pressures. So clearly, there is a muting of, costs have to be kept in check because the full demand has not come back. But certainly anything to do with India consumption, for example, all our businesses where we are, doing business in India, financial services, retail lending, where we are doing home mortgages, etc. Those sectors clearly are doing well, and people should expect the higher end of the, range, 10% or whatever that is. So clearly it is sector by sector, even construction where we are present. You also see a lot of impetus in the affordable housing and other places where there is again a good demand being generated. So the point is it will be sectoral, and I think what's helping in this budget is exemption. Rather the exemption limit has gone up to 7 lakhs where you can get. So clearly some of our people who are starting off, they should benefit from the new tax regime, although people who are used to the same bracket in the old tax regime may be slightly better off. But clearly the new tax regime is what will prevail. So I think people may have no comparison. But I think with a little more money in the hands, I think people will look at more saving and more even both more spending as well.
No, actually, eventually that comes. That's what when tax rebates are expected, it is basically in the hands that an employee is thinking, can they, fulfill their needs or wishes they wanted to in this year's budget or not? Thinking actually and looking for commodities that will actually lower on to the prices. Mobiles are one this year, wherein they can actually now employees feel that they might invest into it. Mr. Menon, what's your take on the same? How do you think that the appraisal bracket that is expected, can be or should be fulfilled by employers this year or not?
Okay. See, my take is like this, that, especially in a service sector like ours, approximately 50% OPEX is wage cost. Okay. And tax is incidental. This year, of course, there is, let's assume the slabs have gone down in a manner, but you never know. It may go up in the next year. So typically when the increments are decided, there are multi-factors that goes in. The primary factor being the wage cost itself, the budget for the wage cost, and of course the company performance, and eventually it comes to individual performance. And of course there is a comparison that is done vis-a-vis the market as well. So this year, giving an 8 or a 9%, which has been, let's assume for last few years, a range has been about 8 to 10. I guess it's going to be in the same range is what my guesstimation would be. And for an individual employee, it would be better off because of the fact that they are getting a better tax slab this year, which is financial year 24. So net take home, as far as the employee is concerned, is expected to go up. So the organizations can ride on it and, possibly look at not tapering, but giving the same kind of a increment what otherwise they would have done. And maybe wait and watch for the next year. And in case if the tables turn, then possibly they will need to do something next year. But I don't think so in financial year 24, there could be much of a drastic change in the way the increments have been given. So that would be my view.
Fair enough, Mr. Menon. Thank you so much, everybody. On the whole, I feel that, it was a good budget in the way that certain expectations have been met, and certain, as Mr. Menon said, we might incorporate in the next budget, because of course there is always a next year to look at. Not every segment always can be happy. So actually they have to look into some segments, but I'm very happy to see this year's budget wherein job security and providing opportunities and upskilling has been the core focus of Mr. Modi. And he's actually tried to incorporate with various schemes that he's introduced, the major being 4.0 upskilling that he has introduced. Just to sum up what exactly we discussed in today's session, it is rated that 6% will be increase in India's economy, and there'll be in the tourism segment basically, so there isn't any entry barriers. So people who are actually freshers or newbies can actually apply into this industry and take home a good amount, because this year government is investing in tourism. Sustainable hiring is the need of the hour, of course, and minimum of 9 to 10% of appraisals can be expected. Of course, it is sectoral, doesn't mean that across all sectors this is the major chunk, but on the whole the net take up is to go up. So I believe employees will be happy to hear this year, and they'll have their list ready as to where exactly do they need to spend and how they have to save, considering their new PIL schemes as well that have been introduced, wherein the savings actually can also go up. So on the whole, I feel the budget was satisfactory to an extent that at least we have something to look on to next year. Thank you so much, everybody, for joining us in this discussion and for shelling out your valuable time and for giving us this information. Thank you so much for everybody for joining us.
Thank you very much.
Thank you.
Hello. Hello.
Hello. Hello. Hi. Can you hear me? Dr.
Yes,
Ajit
yes, I
Chibas.
can. I'm
Yeah,
Dr.
is this...
Desai here.
Yeah, hi, Dr. Ajit. Yeah. I'm not seeing anyone's video. Is my video visible or?
Yes, your video was visible. Can you see mine?
Yeah, I can see yours, but I'm not able to see mine here.
Same here. I can see yours, but not mine.
Oh, okay. Then maybe it's the technical.
Right. I think they have not joined as in.
Yeah, I got a message asking me to join right away. They've not.
Yeah, same here. So I had to come out.
Sir, actually, we are starting in just 1 minute. We are waiting for one more panelist. So we'll be starting in just a few minutes.
Yeah, I have a meeting at 4:15, so that was my request.
We'll be
Hello?
starting. We'll be starting, Dr. Desai. We'll be just starting.
हाँ चालू करना होता हम चाह रहे तो
Good evening, ladies and gentlemen. Thank you for joining us. Today, we are going to be talking about the budget allocation towards the healthcare sector. And we are also going to be talking about the state of healthcare in India. So before we begin this discussion, let me introduce to you our panelists for today. We have with us Dr. Vivek Desai. He's the founder and managing director at Hosmark India Private Limited. We are joined by Mr. Rajiv Chipper. He's the Vice President, Shahjahan Medical Technologies, and he's the Joint Forum Coordinator at AIMET. We are going to be joined very shortly by Mr. Anjan Bose. He is the former president of Philips and the founding Secretary General of Nat Health. We are also going to be joined by Mr. Sunil Thakur, Quadria Capital. I'm joined by my colleague, Shivam Tyagi. He's the editorial lead at BW Healthcare World. And my name, ladies and gentlemen, is Jyotsna Sharma. I'm the senior associate editor at BW Businessworld. So let's begin.
Jyotsna, I just wanted to check. This Anjan Bose. Can you hear me? I've joined.
Yes, welcome.
Yeah, I had some technical problem, but I'm okay now.
Well, we're very happy to have you here. So let's start with the first question. I'll start with you, Dr. Desai. What do you make of the budget allocation this year? We have somewhere around 89,000 crore this time. So your views.
Yeah, so I think it's a fairly balanced budget overall, with the government focus on increasing the capital expenditure, almost by 33%, which will have indirect benefit on most of us, So when we talk of setting up hospitals in tier 2, tier 3 towns, such kind of infrastructure development in terms of roads, railways, airports help internal traffic movement in terms of you can call internal medical tourism, where we are able to shift patients pretty much quickly. Otherwise it is difficult. You see AIMS in Delhi or other hospitals in Delhi, you will find most of the patients are actually from UP, Bihar, central parts of India. So that's something which will help the industry. In terms of allocation to the budget, like you mentioned, 89,000 crores, I think it's about 12.8% more than what was allocated last year. But good thing about it is that, allocations to National Health Mission, National Health Digital Mission, those kinds of things have been hiked pretty much like double or more than that even, So that is a good thing to do. 157 nursing colleges, in all the medical colleges which were promoted by the government, all of them will take nursing colleges. There is also a move to set up a center of excellence for artificial intelligence in healthcare. And I must say that, two of institutions which come to my mind, IISc in Bangalore and Kanpur IIT, both of them are coming up with center of excellences in terms of medical schools on their campus focused on research, So these kind of things will definitely catapult, our internal creation of medical tech, and Anjanda probably will throw more light on it later on. But that's a very good move, because artificial intelligence is making a lot of changes globally. Apart from that, they have opened up ICMR for private sector participation. That is also good because inherently to set up research centers is not an easy task, whereas ICMR already has a established R&D, facilities which are there. There is also an emphasis on creating, training centers for medical devices, something which, the medical device industry has been seeking for a long time, and we've also been associated with some where you need to train, apart from doctors and nurses, also paramedics like radiation technologists, radiology technologists, laboratory technologists, optometrists, dental technicians. So all of that, will take quite a bit of fillip with such kind of announcements. In COVID, if you would have seen that we created a lot of ventilators, but we ran short of respiratory technicians. So that kind of thing shouldn't happen, in future. So overall, I would say it's fairly okay budget for healthcare. What probably did not got done was something which, things like GST. Hospitals as an industry are not allowed to levy any GST, whereas they have to pay GST when they procure goods. So that set off window, one was hoping, but probably maybe sometime later it might happen.
So, Mr. Shiba, if I come to you and ask you, what are the three key things that really stood out for you in this allocation, and what is it that we could have done a little bit more? What could have done with a sort of larger push?
Good afternoon, everyone. So what I feel that the budget, the first thing that I found very astounding was the PPP model that they've looked into. Obviously, there has been a PPP model which the government has done earlier. But this time with ICMR and premier institutes, the entire public-private approach to establish labs, to establish also center of excellences, is something which is welcoming from the industry perspective also, because we've also looked at it from a very different angle almost altogether when we look at the government. But this time when you look at it, it helps us to also come to those areas where there is completely no models available, like the tier 2, tier 3 cities, or even the rural setup itself. As Sir said earlier, if you look at it, the rural population or the the tier 3 and tier 4 population were the ones that were hit primarily during the pandemic, and they were the ones who did not get the right kind of labs, the right kind of equipments, the right kind of even telemedicine techniques which were there. The other thing which we're trying to use better is the entire AI system itself, the artificial intelligence system. So that will benefit a lot. That will benefit and penetrate a lot. So health services need to penetrate. Health services need to be in not only your class A, class B cities or top hospitals. They need to penetrate a lot, and this will help both pronged. Hospitals also get a reach, healthcare providers get a reach, and then healthcare seekers get a reach. So that's the other thing. And the third thing which the Honorable Finance Minister talked about, which was very close to my heart also, was the entire multidisciplinary approach towards medical devices, or the courses and center of excellence that medical devices will now have. Now, this is very, very important. See, what primarily people understand, or primarily there is a general idea about pharmaceuticals, is that it's pharmaceutical. Now, medical devices is pharmaceutical engineering. It is more likely to have an engineered or have a engineering background, who understands the entire healthcare pharmacology to then create a device, and that is where India has lacked. If you look at the entire set of skill manpower that we have, we actually beg, borrow, and steal the manpower from the pharma colleges or maybe the hospitals, train them. Real time training for 8 to 10 months is done, and it's a huge expense which is incurred on each and every company. So I'm assuming this will really, really help in the long run. And a lot of companies, like my own company Sajan, we are into the PLI scheme itself, the production link incentive scheme of medical devices. Now, most of these companies were commissioned under the PLI in 21 or earlier 22. By 24 end of the year, or 25 mid of the year, a lot of these companies will be functional. A lot of these companies will require real time manpower to be hired, and that's the time when we would be having the same set of people who would walk out of these pharmaceutical colleges, or the NIPers who are going to assist more into this multidisciplinary approach towards medical devices. So these are my three takeaways. The slight disappointment, and as it's already mentioned by Sir also, was the entire GST part that we're looking at. Uh, Medical devices are still, unfortunately, we have a 12% GST. At places we've got even 18% GST. These are life-saving devices, and ultimately a GST also impacts the entire patient quantum altogether. So maybe in those aspects we should have really looked at it. That's pretty important. The other thing that possibly I could talk about is the entire part of not promoting the local manufacturers through our part on where we talk about import dependency. We talked about Atmanirbhar Bharat. We talked about all this, but then ultimately the duty goes up when you have importers who are here in India, and local manufacturers who end up paying higher duty. That gives you a startling difference altogether. So if we want to really, really think on reducing import dependency, we talk about import dependency in the medical device sector to almost like 80% import dependency. To rid that, the first important thing that they should have looked at is certainly expected the import duty to go up by a minimum 10% across all range of products manufactured in India, uh, to somewhat to raise the entry barrier of an externally low cost, poor quality product. Now that is important for not only the people who come and import here, but also the people who are actually manufacturing here. So I think on that part, it's something which we would have looked at. And the other thing is, although there was a increment in the entire health budget, but we need to really, really think on the aspect that the health budget needs to be at least 5 to 7% of the GDP. We've committed at 3 to 4% of GDP, but we've not even reached nearby to it.
Yeah, absolutely, absolutely. Mr. Bose, what is for you? What are the key aspects that really stood out, and where is it that bigger push could have been given?
Oh, see, let me, Josna, can I call you by name?
Absolutely.
Yeah. So let me give you a brief overview, as I feel, instead of straight away jumping onto the tree, let me sort of share with you my feeling about the forest view. Okay. So, and let me focus on what we have instead of at first what we don't have, which of course, from the industry, that's always something that we will always do. But I think in the spirit of collaboration with all concerned, including the government, we all have to work with each other. I'd like to give an overview. So as my good friend Vivek, Dr. Desai said, I think also overall it's a positive and balanced budget. We have to remember that post-pandemic was an it's an incredible thing that happened to all our lives. And post the pandemic, the disaster that we had, it taught us a lot of lesson. I think the expectations from all segments of Indian healthcare was sky high. That at last healthcare has come to the radar of our government, and there would be a lot of enhancements in allocations and other things. So to me, that is a bit unrealistic because their healthcare has to be taken in totality as part of the overall allocation and the budget. So to just sort of list out the things that were articulated by the Honorable FM. It's important to realize that the whole world is looking at India at this moment, not for healthcare alone. Healthcare budget is one of the smallest historically, but overall, as G20 president, how India leads the G20, which represents cream de la cream, if I may say. So I think the whole world, I know a lot of friends from abroad were very interested in what's going to be announced in this budget. So the expectation was sky high. Now, what has been articulated, to give a quick list at the cost of being a bit repetitive, but I'd like to be specific on those. 157 new nursing colleges co-located with 157 medical colleges from 2014 have been announced. To me, I've always felt that you can have all the musical instruments, top class, but unless you have good musicians, great music won't come. So is it in healthcare. If you don't have basic talents, human resources with good quality in terms of doctors and nursing, we can have all the technology, but good music won't come. So to me, if implementation is there for these 157, that's a pretty good number in the next few years. I think that will at least to some extent solve a dire problem that we have faced for decades. So that's number one in the list. Then a mission. I think often in the industry, we forget to look at the pyramid outside the zone in which we operate. All of us are located in, Delhi's, Bombay's, Bangalore's. We forget that this country is 120 or 30, whatever crore, and we possibly represent at the top of the pyramid 10%, 20%. So we are also sometimes hooked onto that. I know I'm saying something which is possibly going to be a little controversial, but I'll still say that the announcement of the mission, to eliminate sickle cell anemia by 2047, it's an awareness creation, universal screening, 7 crore people in the tribal belt at 0 to 40 age. I think we all should welcome that because it costs money. Maybe it has to go from some other allocation, but that's also an important part of our country's population, which needs more focus. Yeah. So that's my view on the second point. Third point that she mentioned is the facilities in select ICMR labs. ICMR labs were very protected. They were meccas so far. But government, I think, has broken a frontier by announcing that in select ICMR labs, research will be open for both public sector faculties as well as private sector. The implication of that, I know, I come from medtech basically, although I'm a 360 healthcare person now, but I know I'm advisor to Tata Group, for example, Tata Medical and Diagnostics. ICMR plays a very important role. Their labs, if they are open for collaborative research to private sector. It will also cost the government, and it's a big thing. I think time will tell how it's implemented. Fourth, pharma. I think Vivek mentioned that. Of course, it has not been articulated, but we citizens will hold the government responsible for the announcement, and I'm sure that they will allocate suitable funds. In pharma, we sometimes tend to take for granted that India is the pharma capital of the world. And you see what has happened in two countries. I'm not naming the countries. In the last couple of months, you're in media, they become newspaper headlines all over the world that Indian pharma using the medicines, children have died, etc. So we can't take it for granted, quality or whatever. So new program to promote. The third in the list of Nirmala Sitaraman. So she said that there will be promotion of research and innovation in pharma, and centers of excellence is what they have announced. Now the articulation, of course, will come in the next few weeks, month maybe, but definitely government will stand by the centers of excellence, which will help in pharma companies further innovative work to ensure quality. Next, they announced, which has already been told, I think my previous speaker mentioned, support dedicated multidisciplinary courses in existing institution for building, various kinds of resources, talents, futuristic tech. That's the point I want to highlight. Particularly futuristic tech has been mentioned. Life is changing. I'm sure all of you know about, whether it is Chat GPT or whatever. It is moving at a breakneck speed. I'm also advisor to Goa Institute of Management in their Indian healthcare. I keep telling the faculty that review your courses every 3 months. So government's announcement that a multidisciplinary support will be given for this kind of skill building on futuristic technology is something, I think, an outstanding announcement. We'll have to see how much allocation is done. Artificial intelligence. I personally, Vivek mentioned that he knows. I'm the chief advisor in healthcare of pre-IPO Silicon Valley AI and ML technology company. And I have learned, I'm an IITian 4 decades back, but I'm learning at this age what breathtaking possibility and potential AI and ML has practically on healthcare, in diagnostic, in hospitals, in medtech, supply chain, in quality of outcomes. So focusing on 3 centers of excellence for AI in top educational institutions, whether they are IITs or ISBs, I think, to me, it has a far-reaching effect, and funds will be allocated to those. I think there are a couple of announcements she made, which I'll quickly like to mention. Data is king or queen, to be proper gender-wise. To me, the biggest challenge that a digital economy faces is data management. And in healthcare, it is all the more important because data is sensitive. None of us, you or my other colleagues in this panel, will not like to have abuse or misuse of this very sensitive thing. So their announcement of national data governance policy, it's not a frivolous thing. It's coming in the parliament, from the government, from respectable finance minister. I'm sure we'll see more details like every year. Next 2 months, there'll be a lot of details coming out to enable access to anonymized data. This has been the bone of contention. We all feel jittery today about frauds and linkage of PAN and Aadhaar. I want to share with all my colleagues here also, and those who are listening to this. This has humongous implication, and all of us should be happy that at the top level in the parliament, government has announced there will be a national data governance policy to ensure this, the data protection in healthcare. Now, these to me were the chief articulations this year. The fine prints of GST, duty, Josna for, I think I possibly am the youngest in this panel, with a pun, no pun intended. As long as I can think, whichever governments, we are never happy from the industry. And that's the way the dialogue should go in a democracy. So yes, there are things like, can we raise import duty? There are debates also. Can we raise import duty for across the board? Are we manufacturing high-end capital equipments like CT scanners, MRI, cath lab, protons, linear accelerator? Not yet. It is, I know I've worked and seen in the labs of good companies globally, it takes time. But Atmanirbhar Bharat, and my colleague just now mentioned about PLI, is a fantastic scheme that government announced, and they have shown their intention the last couple of years. Long way to go. Like the famous English poet Robert Frost, he said, miles to go before we sleep. So it is not a one-day solution. Lastly, to your first question on allocation, I will give a clear answer. We know the numbers, 89,000 something, and last year was 79,000 something, 13%. Vivek, you are always I think, he's always accurate. My colleague, Dr. Vivek Desai, I was going to tell just not 13%, but he said 12.8%, which is correct. Now it's, 13% growth in allocation for a sector is not unhelpful. However, like the doctor said just now, about 5% GDP, I think that's a far cry. In the 2017 National Policy of Healthcare, the announcement was that we will go towards 2.5%. You imagine 3 trillion economy, if you want to do 2.5% will be how much more than 89,000 crore. So my conclusion in this sum up would be, let's work together. Yes, I think everybody's expectation post-pandemic was that the numbers will be a bit more towards the 2.5%. It is still around 1.3 or 1.4% of GDP. So I think that's an area where creatively, all of us have to be part of this collaborative effort and see how the percentage of health expenditure of GDP goes towards that goal of national health policy. So this is my sum up, Josna, for this budget, healthcare.
Well, what you're saying is absolutely right. But, if we are hoping, then we can actually hope for 5% or 7%, like you said.
No, of course. They say that dream is the first step in moving forward and doing something, What in technology we are doing today, I have grown up from basic X-ray. Yeah. And to me, it is, next to, unfortunately, defense sector, and fortunately in the space sector, the maximum growth in technology in the world has happened in the last 3-4 decades in medical. So that's the good news, but the flip sides are the training needs, how fast doctors can move with the speed of technology. But there is no harm in dreaming if we look back 4 decades back and where we are today. So absolutely, I agree with you.
Right.
So I'm going to hand over to Shivam. Right. Go ahead.
Right. Let me come back on that point where Mr. Bose mentioned about the PLI schemes, and Mr. Chibber also mentioned. Mr. Chibber, I want to come back to you and ask, how have the PLI schemes aided the cause of medical devices industry in India? And do you think this year, I'm sure the allocation outside of the budget will come, but we've seen that the PLI allocation has gone down this year in medical devices and pharmaceuticals as well. So what's your take on that? And also, as Mr. Bush mentioned that, data is something which is king. The finance minister also said, medical devices are the devices which are collecting the data. Currently, we do not have any law. So how is the industry managing to kind of protect the data with where we don't have any policy as of now?
Yeah, thanks, Shubham. So Shubham, to the first question on PLI, I think the PLI scheme, and as Professor Bose just mentioned right now, is one of those fantastic schemes that the government came up, and it's largely looking at those high-end or import-dependent products that India was not producing till now. Now, if you look at MRIs, if you look at cardiovascular, devices, if you look at IVDs, if you look at other high-end devices, we are now under the PLI scheme manufacturing or going to manufacture. It's a different thing that, 1 or 2 companies like my company, we've already started manufacturing under the PLI way ahead of the commissioning. But then we will, by 2024 end of the year, be manufacturing all these high-end devices under the 4 or 5 categories that the government had put up under the PLI scheme. Yes, obviously, to say that, as Sir said, Atmanirbharta will only happen when there will be a larger segment of hospitals, larger segment of Ayushman Bharat missions taking that particular devices and then being able to utilize it in the entire country, that will be a different thing, because that is where your ROI will really depend on, because a company cannot work without an ROI. A PLI scheme will not be able to work without an ROI. So in that sense, we will be able to really show our strength. And I'm sure that in the coming years, in the coming almost like 2.5 odd years, we will have these devices real time manufactured in India, including the raw materials being also procured from Indian domain itself. The thing where you questioned on will PLI this year, the PLI was not given the kind of credence, or there's not been the kind of uptake of the PLI schemes. The reason is that limiting it to only the 4 segments was something which in the medical devices sector we wanted it to be into other segments also. IVDs till now was not there. IVDs is a big chunk of medical devices that is used, and that is where your question on data really comes on, because these IVDs devices are the ones who use the entire data on a regular basis. We would have very limited the usage of that data from a high-end medical device perspective when we only manufacture. But when it's there with IVD manufacturing companies, for instance, someone who's coming up with a COVID kit would actually have the real-time data of the number of COVID cases. So, data obviously is the next gold in that sense. And there needs to be some kind of, stringent measures. The government is already looking into that, and we're already working. The Department of Pharmaceuticals and the Ministry of Health and Family Welfare is already working with MITI, which is the Ministry of IT Technology, to see how this data could be largely used for disease demographic profiling. Now, if we are not using that data for disease demographic profiling, at the end of the day, even if we have the best of the PLIs, we have the best of the Ayushman Bharat, we have the best of the entire, hospitals who are spread across the nook and corner of the nation, we will still not be able to deploy the right kind of mechanism at the right area. For instance, in Northeast, we do know that there is an entire cancer surge or mouth cancer and others. If we don't have the real-time data or the disease demographic profiling through that data done, it will be futile to have that kind of PLIs. So I think I've answered both of your questions in one go.
Shivam, can I just add to what Rajiv ji said?
Sure.
There is interconnectivity between all these points. I think, first of all, Rajiv, I have also to mention, I have worked for, the so-called global companies. Although Philips in my time, it's now crossed 100 years, I had the pleasure of telling some health minister earlier in my time that there is everybody, collaboration is the name of the game, working together as a team. And when you attract, this is about 20 years back, that when you attract foreign direct investment by making it easy to do business, then you will see that there would be capitals not going to China to that extent, but come to India. So I will personally compliment, that's my feeling, the present government, that there had been a lot of efforts to make it easy to do business with. And that's the only point I wanted to add to what Rajiv said, that, for companies which are global giants, which want to do business here. And Rajiv, I have tremendous respect for what few of you have done in India, like your great company, Sajanan. In India, you have so beautifully produced products that has been helpful at an economical rate. That's a learning for everybody. So I think if we have to make PLI more successful, then also I think more efforts, if I may say, is needed to continue this easy to do business with. A lot of things have happened, but more to do. Like the number of clearances needed is much less. Is it still single window? Possibly not. So that's the only point I want to add. If I'd be very keen, Shivam, with your permission, if Rajiv ji could respond to this. But I personally feel it's to do a bit. What do you think? If I may ask, Shivam?
Absolutely, completely agreed, sir. Completely agreed. I would actually summarize this as a rather than a competitive advantage, it could be called as a collaborative advantage. for
Yeah,
everyone.
exactly.
So one line summation, collaborative advantage, and this gives India the fillip that we require.
Sure.
I would thank you so much. I'd like to get in Ms. Thakur in here. So, Ms. Thakur, we've spoken so much about what are the key things that stood out from the allocation. I want to get in your views on this, and what are the three key things that stood out for you, and where is it that we could have, given a larger push, basically?
Thanks, Joseph. So first of all, thank you for inviting me, and hi Anjanda, hi Rajiv, hi Shivam. Sorry for being late on this program. So, I think the big takeaways in terms of understanding the direction of the government towards healthcare has been skilling, which I think was a big through the colleges that they've announced to sort of put together for nursing staff, especially, and also the multidisciplinary courses that have been talked about for the medtech space. So skilling, which all of us know has been a bane for the industry for the longest time, is now being addressed in a big way. Now, the second aspect is the big focus on the research and research across different forms of healthcare, be it on the clinical side or on the pharma side, and also the whole participation and joint working between academia and industry. So in various forms, the government is sending the message about the importance and weight that research carries. The third aspect is data, and data again in various forms. The setting up of those 3 AI centers, also the focus on how industry and startups can use anonymized data, which is so progressive. So I would bundle that as part of how government wants to use now data and technology to sort of deliver better outcomes. The fourth aspect is the focus on rare disease, and there is a big program that has been announced around eradication of sickle disease. And in all of this, there is that commitment towards building the infrastructure. So nursing colleges on one hand, while it's addressing the skilling issue on one hand, it also goes to build the infrastructure. So these are some of the big takeaways. If I have to read the lens, and sorry, on the last point related to infrastructure, there is that whole PLI, which the provisioning has been made, and the park allocation for the parks, which were announced earlier. So that sums up the direction and vision, which is great. If you look at all these big buckets of skilling, research, data, infrastructure building is what the healthcare sector needs. What I would have wished for more is higher allocation in all these buckets, and that would in some ways also go towards meeting our aspirational number, which ideally should be the base number of 2.5% spend on healthcare, which is being targeted for 2025. So, I think the direction is right. It is just about the size of allocation that we bring into each of these buckets is what I would have hoped for.
Well, yeah, you're saying aspirational numbers, but just now we were talking about that if you're hoping, may as well hope for 5 to 7%. But yeah, now moving away from allocations for a bit, let's talk about how, in your view, our healthcare sector has progressed in the last year. So if you were to simply give us a snapshot of what you think we've done right.
I think it has progressed in the right direction on many fronts. I think the biggest change or impact has come in the area of technology, both as far as technology for consumer as well as technology for enterprise is concerned. And this straddles across all forms of or all segments of healthcare, from hospitals to diagnostics to pharma, life sciences, medical devices. That has been the biggest sort of change that we've seen. Enterprise is talking about how to become efficient, how to deliver, on the right time, the right quality, the right product, right price using technology. Consumer, they are now demanding, they are now expecting, they are going in for convenience using technology. So that in some way has been the biggest change or driver that we've seen in the last 1 year. The second big change is the whole focus on localization. There is a significant importance now given to localized industry, especially with what most people in the industry faced during the pandemic. I think there is a great appreciation for local industry, local products, both from client customer point of view as well as from government. That in the end you have to depend, the dependence and the load comes onto the domestic, and I can see Rajiv smiling for the right reason. But that sort of has become that was what the second big driver. The third that we saw was there is a great deal of consolidation and institutionalization that is happening in the industry. Consumers who are now aware of need for healthcare and quality of healthcare, they are ready to pay a little more for good quality healthcare, and that is leading to consolidation. So the larger national players, the larger regional players, they are now consolidating to be able to offer their services to a wider set of population. So that's the third big thing that is playing out. And the fourth, the last, is consumer healthcare. And within consumer healthcare, I would break it into two parts, which is now healthcare is moving beyond hospitals, beyond the prescription of doctors. Consumers are becoming aware that I need to do X, Y, Z, for me to stay healthy or cure myself. At least with the with the low risk medical issues. And also there is that importance of fitness and how to use devices. So that is becoming a big play, and within that, preventive healthcare is becoming sort of a mainstay, and everything around either services or products that are enabling preventive care is now growing and becoming prominent and dominant in a big way. So these are the four big things that I see bringing big change over the course of last 1 to 2 years.
So moving on, Mr. Bose, I'd like to get your view on what is it that we did right in the last 1 year in the sector. What have we been?
What comes, I think, in addition to what Sunil mentioned, what, as he was saying, it was all the right things. What comes immediately to my mind is a digital jump in the interest that the ecosystem has taken on helping startups. Yeah. This was one of my personal dreams. I've worked on the platform of a bigger company, and I've seen brilliant IITians and other young innovators who just due to inadequate support has not been able to move forward, and consequently the nation in terms of healthcare has possibly missed out some innovation. So in addition to Skill India, Digital India, etc., which has had large impact on healthcare, Startup India, I think in the last, not 1 year only, 2-3 years, I think it has been a very major factor. Coincidentally, one of my advisory role also is India Accelerator, which is India's government selected best accelerator company. And, I'm the lead advisor for the health tech vertical. Every week I look forward to the weekly calls with the startup to see what kind of innovative ideas they are bringing. So I think, in short, this is lot more to do, but this has been one of the single biggest achievement. Awareness that we must, it's not only the biggest, not only the G's and Siemens and Philipses and Sargent's, etc., that will be contributing to the progress of healthcare, but also innovative ideas from incubators, from the startups. We need to support them. So I think, to me, if you ask me one, that's what comes to my mind right now.
Okay. So I have just been informed by my colleagues that we're kind of running out of time. So in the interest of time, I'll go to Mr. Chibbar and I will ask him that, in addition to what we've done right, what are the healthcare trends that you see will be sort of there in 2023 that we'll see?
See, the first thing that the government only talked about is the entire PPP model itself. Now, I would coin it very differently. I would not coin it as like a public-private partnership. I would coin it as a partnership for a public purpose. You will see many, private entities diving into the entire healthcare sector with the ICMR labs or with the support of your digital tech that will be available to really go to the last mile connectivity. And that is where you require more domestic manufacturers to be the last mile enabler. So that will surely have a shift. So I think one thing which the government walked the talk during the budget this time was Jai Anusandhan. When the Prime Minister in his last year talked about Jai Vigyan, this year he talked about Jai Anusandhan. Is like the right research and development which needs to be done for quality medical devices or quality medical and pharmaceutical products to be available globally. So I think this will be really the walk the talk that the government will be looking at.
So I'll pass it on to Shivam now.
Right. Yeah. I want to ask one question to Mr. Thakur. Mr. Thakur, we are seeing that there is a increase in interest of hospital players to go in tier 2, tier 3 cities to set up hospitals. So how is the investor interest like in tier 2, tier 3 cities? Are we seeing profitability? There are some hospitals, there are some groups of hospitals which are doing it. And so what are the fine points that which are coming out as, which are making them go there and set up hospitals? And what is the investor interest like?
So there is certainly investors to go into tier 2, because what has happened in the past few years is the government has now empowered the bottom end of the pyramid, which is 40% of the population, with significant allocation for their yearly healthcare needs, which is 5 lakh rupees per family. Now, most of these people are in those extra urban rural centers, which are tier 2, tier 3 cities. So they have now the purchasing power for healthcare services. But what they lack is infrastructure close to them, because it is not only about the patient who has that medical need or is suffering from some kind of an ailment. There is that entire paraphernalia of family members traveling with them. They need to travel. 48% of the Indian population has to travel more than 100 kilometers to get any kind of secondary care. So how do you bring healthcare closer to people who now have the purchasing power? So that is the big driver for us. But in order to crack it, it's not that you just go and set up something and you have it. You can get those population. There are a lot of supply side issues that needs to be catered, and especially with respect to human resource. And when I say human resource, it's about the clinical talent. Can you get people to work in those areas? Can you get nurses? Can you get paramedics? So that becomes paramount to the success of the setup in those towns. So there is good demand. There is great interest for deployment. It's all about how do you bring together all these supply side challenges and issues to sort of make it work.
Shivam, can I just add one small thing to what Sunil said? Just one very quick, which I think has not been discussed for quite some time. The concept of integrated care. Sunil has just brought out in response to your good question with a very good answer. This segregation of primary care and secondary care and tertiary, super tertiary care is not the solution. The solution is in an ecosystem of integrated care, and we are going towards that direction because of the technological innovation. It's like I said in the beginning, that it's all integrated. It's interdependency, the digital tech, the preventive and wellness, like Sunil mentioned, the money purchasing power is reaching now towards the bottom of the pyramid. It's all interconnected. So I just want to mention that, and that possibly the concept of integrated care will catch up, where I think practically speaking, the solution will never come, in my opinion, of doctors going to remote villages in hordes and all that. It won't happen. So technology is the one which is happening in many states which are more advanced in healthcare. Technology can bring, if the horse doesn't go to water, bring the water to the horse. So bring technology through distant, remote healthcare systems which are possible today to the villages, to the tier 3, 4 cities, tier, the lower tier cities, etc. Just wanted to mention that. So I think collaboration, which I think many have mentioned, is the name of the game. There has to be a lot of collaboration of whether you call it public-private partnership or collaboration, government and private, between private sectors, various players, integrated care. I mean, I would love to hear all of you, what do you think of this? But I wanted to mention that.
Thank you so much.
Thank you.
I think running short of time, so Shivam.
Yeah, I just have one more question to Mr. Thakur. This is a follow-up. So there was this ask of viability gap funding for tier 2, tier 3 cities by the hospitals this year, and also your views about the rapid consolidation which is happening by the big chains. Uh, how do you see that playing out in the healthcare sector in 2023? How will the consolidation space be?
I think the consolidation story will continue for the reasons that I mentioned. That now there is that great need for good quality healthcare, and people are ready to pay for it. There's an awareness for that, and that sort of is driving the need for larger institutions to get into those tier 2, tier 3 markets to provide access to good quality healthcare to that population set. So that is sort of driving. Market is paying a good premium to pan-India players, and they now have currency to either through a public market or through private equity to basically play the whole consolidation strategy. And I see that happening not only in 2023 but beyond 2023. Market in India has just started to move from a fragmented structure to now a consolidation, more evolved, mature market. And this will continue for the next few years.
Right. Yeah, as Jyotsna ma'am said that we are running short of time here. On that note, I think, yeah, as you rightly mentioned, people's purchasing power is increasing due to the PMJ, as well as, we have seen an announcement by a finance minister this year that tax slab has gone up to 7 lakhs. So I think that's also going to help immensely in people's purchasing power. Right. So on that positive note, I would like to thank all of you for joining us here on such a short notice. And yeah, thank you. Thank you all for joining us.
Thank you, Businessworld. Thank you.
Hello and welcome to Business World. I am Tarannu Manjul and today we are with students from Indian Institute of Management, Lucknow, who will be discussing the union budget with us. So first of all, I would like to welcome all the students of Indian Institute of Management, Lucknow. Welcome everyone. And let's have a small round of introductions for everyone. We can start with Naitik.
Hey everyone, this is Naitik here. I'm also chartered accountant apart from pursuing MBA from IIM Lucknow. During my internship, I interned with Vito Capital and will be working over there post my MBA.
Thank you. Next, we have Arav.
Yeah, hi team and hi everyone. Thanks for this opportunity. So my name is Arav. I've been in the investing field for 3 years covering the BFSI sector, and post that I decided to pursue an MBA from IIM Lucknow. So currently here and plan to join the investment field after this. Looking forward to this session. Thank you.
Thank you. Pradni, a small introduction.
Hi, good evening, everyone. My name is Pradni. I'm an economics graduate from Ferguson College, Pune. Generally, I'm a fresher. I have been interested in research. Economics is something I love, so generally follow the economic survey and budget. Uh, During my internship, I was with Alliance Bernstein in equity research, and after my MBA, I'll be joining McKinsey.
Thank you, Pradni. Hi, Snehal.
Hi everyone, I'm Snehal. Pre-MBA, I have qualified as a chartered accountant. I have 3 years of work experience in the financial services sector, and I am a first-year student here. Looking forward to working in the investing field later. Thank you.
Thank you, Snehal. Hi, Rishika.
Hi, Tarunum. Thank you for having us here. I'm Rishika. I am a second year student at IIM Lucknow. And small introduction, I have been working in JP Morgan as an investment banking analyst before joining IIM Lucknow. I have cleared all 3 levels of CFA, so have some finance and investing background there. I interned with McKinsey and I will be joining the same after my graduation. Glad to be here.
That's really good. In fact, I believe then we have a panel of people who can discuss the union budget with 2 perspectives, as you know, people from finance sector and also people who are studying in one of the most premier universities in India. So quickly starting off with the first question, I would like to know what is your opinion about the union budget, and let's start with Pradni now.
So I think this budget has been very cognizant of the realities in terms of the macroeconomic scenario that the world is facing. So India right now is like an island of growth amidst a global slowdown. And on this front, I think there are 2 things that the budget does mean. In order to boost the existing engines of growth, it has taken up measures like increasing the capex. It has change the tax regime so that it gives a push towards more consumerism, which are majorly existing engines. But apart from that, it has also enhanced and expanded the engines of growth to incorporate new avenues like financial inclusion or the agri-tech area that is incorporating rural areas. So it's basically widening the pie, the scope of growth and production. So I think those are 2 main things, and I think that's very good that it's cognizant of those facts.
Thank you, Pradni. In fact, now, Naitik, if you can give your views on the budget, the Union Budget 2023.
Yep. So the budget is more of a clear blueprint towards, laying down the vision for next 25 years, as it has been called the Amrit Kaal. In fact, when we analyze the past several budgets, it is clear that the quality of our spending is changing. If you look at capex as percentage of GDP, it has increased from 2.1 in FY21 to 3.3 in FY24. And even the year-on-year growth is about 30%, which is already on a growth of 26% in the previous year. So all this adds up to show that government is here playing the role of an enabler, with schemes such as national logistics policy coming in and those kind of focusing on having our logistics cost as an economy. I think the focus towards railways and roadways, all this adds up towards making a growth story for India over the next 25 years. And the higher multiplier of about 2.5x on capex spendings versus revenue spending is something that kind of supports our growth as well.
Thank you, Naitik. That was very wonderful, in fact. And now over to Rishika. Rishika, if you can share your views on the Union Budget 2023.
Yeah, sure. So I'm completely in line with what Pradni and Naitik mentioned. Adding to that, I think government has been nudging basis this budget. Government is taking a role of nudging the taxpayers towards a new tax regime to essentially boost the consumption expenditure in the economy away from savings. So essentially to have a multiplier effect of the investment of the extra consumption expenditure. And coupled with this, if we look at the trend, they have been reducing subsidies over the past few years and increased capital expenditure. So essentially adding more wealth to the tax for the taxpayers, and also stimulating them to spend it. Also, it is a very environmentally conscious budget with an eye on net zero. In line with the Paris Accord and the UN SDGs, budget has increased focus on green energy specifically. For this, they have allocated a whopping 35,000 crores in green energy transition and further 19,700 crores in national green energy mission and so on. So very, very positive step towards in this area. Apart from that, one pain point that I could identify was the fact that if we see the tax revenues are expected to be growing at somewhere around 11.5%, but if we compare it tax to GDP ratio, it remains constant. Thus, the growth in tax revenue is essentially driven by economic growth and not tax buoyancies and efficiency in collection. So that is something that we can further see and how it unfolds in the future.
That was a very detailed view on the budget, in fact. And over to Sonakshi now. Sonakshi, if you can share your views on the budget.
Yeah, so in line with what Rishika also mentioned about the UN SDG goals, I think apart from green energy, they're focusing on many other goals as well. So they've increased their allocation to a few major schemes, including the pharmaceutical industry, Jal Jeevan, Amrut Mission, health mission, housing, etc. So I think it's really going to help our economy be on the forefront on the UN SDG goals. Apart from that, as we know, our economy is quite agrarian, right? But it's viewed as an economically unsustainable sector, despite a significant proportion of our population relying on it. So in the recent years, the allocation towards towards agriculture in our national budget was limited, but this time in this budget, the agri budget has increased by 20 lakh crore, and it calls for a massively positive step for the growth of the sector. And additionally, in this also, the Agri Accelerator Fund is a good step. It will help enable businesses to navigate government regulations and connect all stakeholders in the farm supply chain and network, and also help these agri tech sector boost, as Pradni mentioned. And one last thing in this agri part itself, that for farmers, especially the small and marginal farmers that make up most of the proportion of our agrarian economy, the government is promoting the cooperative-based economic development model as well. So the sector, which is actually making up most of our economy, might finally get the boost that it needs with all the capital-intensive expenditures also.
Thank you so much. In fact, you focus specifically on the agri business thing and agriculture, which is, after a very long time, we saw such a huge allocation for agriculture specifically. In fact, Snehal, now if you can share your views on the budget.
Hi, Taranum, sure. So contrary to what my seniors spoke about the budget, I believe that the budget has very overambitious targets. Given that, the current fiscal rate in this year was around 6.4%, which the government targets to decrease to 5.9% in the subsequent year and to around 4.5% by FY25. I believe the government has not accounted for revenue expenditure, which forms a part of the fiscal deficit also, appropriately. Now, given one, let's talk about food subsidy or fertilizer subsidies, which are among the major components of revenue expenditure of the government. If we see the figures which were allocated to them in FY22's budget last year, we see that the allocation to food subsidy was at around 2 lakh crores, but the revised estimates say that the actual spend, which could be at around 2.87 lakhs crore, that is, an overspend of around 40%. Coming to fertilizer subsidy again, the budget allocation last year was at around 1 lakh crores, and the revised estimates say that it could be at around 2.25 lakh crores. Again, it's, an overspend of over 100%. But this year's budget allocation to food subsidy is at around, 1.97 crores, 1.97 lakh crores rather. And for fertilizer subsidy, it's been decreased to 1.75 lakh crores. Now, also taking into account that we have the general elections next year, the subsidies expenditure will in no way decrease pretty, naturally. So I believe that this is a misrepresentation on the part of the government here. Now, coming to the tax, the new regime of taxation as well. The new regime, talking about the very small aspect like the Mahila Saving Certificate Scheme, this, I would not want to use the term sham here, but this appears to be a highly misrepresented instrument, given that our FDs are also offering a rate of around 7 to 7.25%. And this instrument is offering a 7.5% on a 2-year tenure with no tax benefits in the new regime. And this instrument is not even a bearer instrument. So as such, the women who actually invest in these do not have any virtual benefit. And the new tax regime, which the government is encouraging, is precisely discouraging investment and savings on the part of the masses, the common man. It is promoting private consumption at the expense of the common man. So I believe that the government has a very short-term view to increase or improve the figures in the economy. It's not thinking about the long-term perspective of the people. Right.
Yeah,
Tarannum,
sorry.
you're not.
Yeah. Well, as you said, you spoke about, the next year is an election year. So this is actually the last full budget. And when we talk about short-term, views or short-term goals, perhaps that must be a reason behind this, because next year is an election year, of course. And next year we will not have a full budget. This is actually the last full budget which the government has presented. So that might make a difference, but that was a wonderful view, in fact. Now, in fact, we can go to Arav and have his views on the union budget.
Right. So I'll speak a little about the capex. Like that has been the theme of the budget for the past 3 years, and now just to point, people have been very optimistic about the capex. But being from the investing background, I'm just thinking, say, 2 years ahead. Now, just to say, give some numbers. Right now, the fiscal deficit in absolute terms is 17 lakh crore, which is 5.9% of GDP, which they have budgeted for FY24. If I grow the nominal GDP by 11% for the next 2 years, say by FY26, and I just back calculate the government target of 4.5% of GDP, that is the fiscal deficit target, I get that my fiscal deficit in absolute terms has to remain at 17 lakh crores. Now, what does this imply is that my fiscal deficit will remain at 17 lakh crore for the next 3 years. Now, why this looks a little challenging and why I'm a little worried about the capex, decreasing over the next couple of years is that interest expense, if we track as a percentage of GDP, has grown, say, from 4.5% levels to 5.5% levels currently. And the way the debt to GDP is growing, it's almost that the interest payments for the next 3 years at least is going to grow by, say, 10 to 11%. So to keep the fiscal deficit absolutely at 17 lakh crore, you need a consolidation of 150 basis point. And that too, when your interest rate are going up as a percentage of GDP. Now, what this means is that Naitik talked about, capex as a percentage of GDP going up, say from 1.7 couple of years back to 3.3% right now. I think that is where the most of this leeway will be taken away, because if we have to go towards this consolidation, somewhere or the other expenditure has to be cut. And that's the reason I think capex, this 10 lakh crore is that one last year where we are going to see such huge jump in capex, and going ahead there might be disappointments on this front. And another important point to note here is that state government has borrowed 2 lakh less compared to what they were budgeted, and state governments are not able to spend. I think a lot of broker houses have also been able to written a lot about this. The state government's cash balances are an all-time high with the RBI. They're not able to spend. So it's very, very good to talk about capex, very good to talk about how capex has grown. But at the end, is the capex spending happening? Till now, if we have to meet the revised estimate of FY23, the capex has to grow by 30% in the final quarter, which looks very, very difficult. So I think capex, if private capex and state capex doesn't pick up this year, government capex can only do so much of it bit. And I think in the coming year, we are set for disappointment on capex. Just from a mathematical perspective, we have to go towards this fiscal consolidation stance.
That was wonderful. In fact, Arav, you gave the numbers very well, because it's been, and in fact, what I realize is that all of you, bifurcated the entire budget according to the sectors which it has been, decided upon. So it was a very wonderful way of listening to your views on the different parts of the budget. Coming to the second question now, in fact, since we look at the budget, the major component of the budget was skill development. So when we look at the budget and the skill development component, my question now would be to Snehal and Sonakshi. Snehal and Sonakshi, do you think that the skill development component of the budget, and especially the National Skill Mission, and saying that they want more skilled workforce in India because they are increasing the number of industries and making India competent, do you think that it will actually help the youth in terms of employment?
So I would like to take it up first. So I believe with coming to the budget allocations, the central government has increased its allocation by around 13% over the revised estimates of the budget over last year. And it's now at around 1.16 lakh crores for skill development in particular. The skill development programs of the government are operated through the ITIs, and they provide free training to the various masses on vocations rather, be becoming an electrician or stitching or sewing, etc. Now, in case the government trains more and more people, it will reduce the pressure on the government for deploying these people, employing these people on certain kinds of jobs. Now, and it promotes self-employment. As such, the unemployment rate would improve on the part of the government. Now, because highlighting the figures here that the government also, is conducting Rozgar Melas and offering 7 to 8 lakh jobs currently it has on its cards. So that pressure will reduce here. And given that National Digital Library is also being promoted or encouraged by the government, although it has no direct impact on skill development, but in the long run and incentivizing children to develop a habit of reading, it will go help in the long run. Yeah.
Thank you, Sneha. Over to you, Sonakshi, for this.
Yeah, so I think the budget does give a much needed boost to the youth empowerment in the country. So they have focused on upskilling, but they've not just focused on upskilling, but also adopted economic policies that facilitate these job creation at scale and support business opportunities. So they've actually hit both sides of the coin over here. And as Srimati Nirmala also said, that it is the Amrit Pidi that we have ahead of us that we need to skill over here. Coming to more basics, for example, in the PMKY 4.0 that they've launched, they're focusing on Industry 4.0 teaching AI robotics. And like at statistics, so blue and gray collar job demand in India grew by 4-fold in 2022. So this is a much needed impetus that was required. And given that they're not just focusing on development, they're also focusing on strengthening the quality of education over here, teacher competencies, developing a robust infrastructure. So I feel that overall they've covered it well. And given that they've hit both sides of the coin, it should be a good improvement over here.
Definitely. In fact, thank you, Sonakshi. Since you guys actually spoke about now, like we were talking about, skill development and employment, and there was another component in the union budget, where the center is actually promoting Make in India through different ways, promoting fintech, agri-tech. The whole idea is, having indigenous manufacturing in India. So do you guys think that the union budget actually promotes Make in India? And this question I would like to put to Rishika and Arav. So over to you, Rishika, for this.
Yeah, sure. So the vision of Atmanirbhar Bharat started way back in 2020, and since then the government has been putting in consistent effort to make India self-reliant and promote indigenous manufacturing. And I think the budget follows the similar theme. So if we specifically look at the custom duty changes that has been brought out by the budget, the scene that government has tried to pick in products that are essential raw materials for manufacturing of different products, including specific sectors like say pharma or say lab grown diamonds, precious metal, just to name a few here. So the idea is to reduce the custom duties for products that are necessary for further manufacturing and not look at the finished good industry in general. Secondly, if we further dig down on the capital expenditure part, we see the investment in railway has increased by 16%, and that in road construction has increased by higher 25% or so. So all in all, there's a push towards infrastructural development that is gonna support all the sectors in general. So the idea of Make in India is the core of the budget, in my opinion.
Definitely. In fact, Make in India was something which, everyone was expecting that the budget would actually have the core component as Make in India, and it was very evident yesterday what happened. Coming to Pradni and Naitik now, what is your opinion on the SOPs for the IT sector? Because the IT sector has been given a very big boost in the budget, especially since everything goes digital. What do you think what is your opinion on the IT sector, the SOPs for the IT sector in the budget? And I would start with Naitik first then.
Sure. So IT sector exports are actually important for the economy, not just in terms of providing you a skilled employment, but also in terms of economic growth, in terms of, helping with the current account deficit and bringing in those precious foreign currency to India. Last year's budget focused more on National Mission for Quantum Technologies, where they allocated 8,000 crore to be spent over 8 years. This year, we have laid more emphasis on Make AI in India and Make AI work for India. These frameworks will be, helpful for India to move to a higher end of the IT value chain outside just the more of a service kind of a nature. And setting of 3 centers of excellence for AI and 100 labs of 5G service development seems to be those right facilities we need from the government's end to kind of further this sector. However, some dampener is seen in the form of angel tax coming in for foreign investors in Indian startups, which can be seen in the fine print out there. Pradni, you may want to continue.
Sorry.
So
Perfectly fine. In fact, now Pradni, you can take over this.
yeah, I would like to focus on the technology sector. They've given some 16,000 crores, lakh crores, 16,000 crores for the technology on all fronts. And if you look at the major heads of allocation there, they are semiconductors and electronics. Incidentally, these are the ones which China exports extensively. And now, because of COVID and a lot of internationally, a lot of countries looking for alternative supply chains with the Russia-Ukraine war and the world having realized the problems of having single supply chain. So they're looking at alternative supply chains. India is trying to capture that specific market. So it has done that on two fronts. One, it has given incentives for production of semiconductors, and there's also a design linked incentive, which is a smaller number. It's around 200 crores. But the important idea there is that it creates more innovation, not just on the existing market, but also to create a new market for more efficient semiconductor products. And it's also going to benefit the green tech that they are focusing on in India. Apart from that, of course, they are also focusing on green tech like hydrogen, and those are more of the upcoming markets that they're trying to capture. And the second thing, as Naitik mentioned, is AI and agri-tech and 5G labs that they're focusing on. And they are going to help twofold. One, on the producer side, which is it is going to create a tech stack for startups to come up. And once that tech stack is set, you don't necessarily need people who are tech savvy to start a new venture to solve problems. You are okay with any sort of person who has the solution in mind. So that is democratizing solution. And on the consumer side, it is going to help millions of the next billion customer segment that they say, who are rural, who are low income. It's going to be very inclusive. So I think it seems esoteric technology, but it is actually democratizing a lot of solutions for people.
That's perfect, Pradni and Naitik. In fact, the whole idea behind having the boost on the IT sector was that manufacturing should be removed. In fact, we should stop importing things from countries like China and give the world a new hub for all different industrial production. And in fact, now we're coming towards the end of this discussion, and it's been very wonderful how you guys have actually bifurcated the entire budget and presented the different opinions all together. So I would like to, in fact, know that what has been your biggest takeaway? Like, you guys must have seen the budget from yesterday and today. You must have, actually analyzed it and seen it from different angles altogether. So what has been, as students of Indian Institute of Management who go out in the corporate world tomorrow and, make policies and work in corporates, what is your biggest takeaway from the budget? And in fact, now this time I'll start with Naitik.
So it's been loud and clear that the next 25 years are for India and India's growth story. And the budget lays it out clearly: come invest in India. The government is there to support you. The government is there to make the capex out there to make the infrastructure necessary for you to come and do business in India. So yeah, that's the big takeaway for me.
Definitely. In fact, Pradni, over to you now. What's your biggest takeaway from the budget?
So I think I have both some positives and some words of caution. On the positive side, I would say, India missed out on the manufacturing revolution and the industrial revolution. But with a few of these incentives and how it's going, I think they are trying to capture the industry 4.0 at least. So that's good. But in doing so, there is a lot of money that's being spent. We already have expensive borrowing. So it might do well to be aware of that and have fiscal prudence in mind as well.
Perfect, Pradni. And in fact, Rishika, if you can share your takeaway from the budget 2023.
Sure. So as we celebrate Azadi Ka Amrit Mahotsav in this Amrit Kal, I feel the budget is well placed when it comes to stimulating business in various sectors and also balancing it with the greener development that is being the global focus right now. So I'm excited to witness FY24 and beyond, and let's see how it rolls.
Perfect. In fact, very crisp, and I totally understand that it's the Azadi Ka Amrit Kal budget, and that was the whole focus of the budget. In fact, Arav, if you can share your views on your takeaway, the biggest takeaway from the budget.
I think I have two takes. Being the budget is getting incredible. If I say talk about years, just figure
Arav, your audio is echoing. Arav, I believe you can join in again.
Yeah, is it better now?
Yeah, but we can't see you. We can only hear you now. In the meanwhile, in fact, if Snehal, if you can share your opinion, Arav, we can have him. Yeah.
Sure. So, having spoken negatively about the budget and about the overambitious targets, I believe in case they are achieved, I would be among the happiest citizens of the country. In case, the revenue expenditure is cut down and the fiscal deficit is actually maintained. So, yeah.
So Snehal actually today decided that she'll keep the balance there. Okay, actually Snehal decided that she'll keep the balance going. I think Arav is back. Arav,
yeah, right.
Yeah, Arav is back. So Arav, if you can share your takeaway from the budget.
Two takeaways. There used a lot of IBR. Resources. I just walked through it as a government the energy into the and this capex railway also has been half. There has no IBR in the road. I mean is the government making the whole number very extra beyond the purchase earlier, and so people face value, and that's a one takeaway. And second being that the government knows how to balance stuff. So for example, you have these tax cuts of 35,000 crore effect where the rates exemption limit has been increased. Just to put some numbers into perspective, almost 60-70% of taxpayers file for tax less than 7 lakh according to the 2018 data that I last saw, but the tax they pay is only 20-30%. So you have an exemption tweak which is affecting 70% or 60-70% of the population, but not making any economic dent to the budget. So you are taking both the economics and politics of it into consideration. So I think this government knows how to balance stuff and is trying to make everything more credible going ahead, which is very good for India and its rating going ahead.
Perfect, Arav. In fact, Sonakshi, if you can share your takeaway as well on the budget.
Yeah. So I think this year the budget is very well laid out in terms of its nitty-gritties, one, and two, keeping a very long-term horizon in mind and not just the next 1 year. So they have thought about the industry. They have also thought about agriculture, and they have put in a lot of nitty-gritties in the sense that, for example, they have laid out they've laid out structures that data centers can be within India, that companies from outside can establish their data centers in India, and we know data is the next oil, and this is what is like a lot of processing power goes there, and if we are able to provide that at a low cost, is going to be a huge impetus for India. So with all of that in mind, and also the custom duties have been reduced on very strategic sectors and strategic industries. So I feel all of that together gives a view to the world that hey, we India are ready for what is ahead of us as a globe, and we are going to be a growth island, as Pradni mentioned.
Perfect. In fact, I love that term, growth island. Since we have a few minutes now, a very quick random question. I'm sure you guys will actually, put a point across on this question. What do you guys think was missing from yesterday's budget? We all have been, praising the industry, has been praising the budget in a big way. Everyone has been lauding. What do you guys think, that has been missing from the budget? And in fact, Pradni, Sonakshi, if you can start off with this, what do you think was missing in the budget? So,
Yeah.
Sonakshi, yeah. So what do you
Am
think
I
was
audible?
missing from the budget? Yeah, you're audible. You're audible.
Yeah, I think I don't know if it's a bias, but I have a very positive view. I feel that it covers all the sectors. But maybe if there's one thing I want to highlight is that more focus could have been given to ease of doing business in the budget. So, for example, in the previous budgets, a lot of highlights were on how policies have been eased out to give impetus to this sector. That was not quite there in this budget. It was probably very hidden.
Perfect. Arav, if you can, share your view on what was missing from this budget.
Right. So I think any country, since a lot of thrust has been on manufacturing, any country which has experienced a manufacturing boom has seen its carbon footprint rise historically. Now, the case in point here is that for if I say go to a very big house and tell them to use cleaner sources of energy, they can switch to the cleaner methods very easily. And if I go to an MSME, a very small scale steel industry, and ask them to alter their products, alter their technology to suit the new needs, it's not very economical for them. So I think a lot has been said about green energy, a lot has been said about manufacturing, but the incentives for small firms to participate in this revolution, where they're incentivized to use the newer and cleaner methods, has not been laid out. So if we are going towards a new world which is not inclusive, then I think that will just keep rising, that will just keep raising the inequality bar in India, which already exists, and we might not be able to get all of the people together with us.
Perfect. In fact, that was a very valid point you put across. And I think that I personally felt that that was something that was missing. Snehal, if you can share your view on what you think, I'm sure that you will have a bigger view on this. What was missing from the budget?
No, I precisely would drawing, from what Arav said about inequality. Couple of things which I found missing was first with respect to the tax benefits and in the form of tax holidays, which could be given for the underprivileged areas or the underdeveloped areas of the country. We did not have any new provisions on these lines. And secondly, there was no new allocation for the medical facilities and medical infrastructure, where our country is still lacking and still lagging behind. This would have been more, better.
But yeah, there was a point on having new medical colleges. But of course, yes, when we're talking about medical manufacturing, in fact, and medical equipment manufacturing, not much stress has been put on that. And that has to be seen whether it comes under any other component or not, or whether the government actually promotes it or not. That really has to be seen. Thank you, Snehal, for that. And in fact, Naitik, if you can put your comments on this, what do you think was missing from the budget?
So from the budget and obviously how the stock markets have reacted, we can see that insurance companies have taken a hit mainly because the push is towards a new regime, and the old regime is something that used to help insurance companies a lot in terms of by providing exemptions and all. So something for the financial sector should be out there to balance that out, because India is still kind of penetrated in terms of insurance, and they still need to push the products out there. So something on those lines, and also for the fintechs and the financial ecosystem out there, maybe something more of a push out there is something that could happen.
Yeah, in fact, there has been a point, on pushed on fintech, but it has not been very clear and clarified. Like if it was more clear and more, point to point kind of a thing, the industry would have been happier, in fact, to understand that. Perfect. In fact, I think Pradni is left now. So Pradni, you can give your views on the same. What do you think was missing from the budget?
Yeah, hi. Am I audible?
Yes, you're audible.
Okay, there was a slight net issue on my part.
Yeah.
So, what I think has been recurring with the past budgets is that the government has usually had very high, lofty disinvestment targets, and it hasn't usually lived up to those. This time, what we see is that it has lowered the disinvestment target as compared to last year. So I would have suggested rather than becoming unambitious, might have tried to set up a higher target and try to achieve that. So maybe that would be.
Perfect. In fact, that was wonderful. And I think we've just touched our time pretty well. And that was a very short and crisp and, to the point kind of discussion. In fact, I really like how you guys actually, decided to take different views on the budget, and it was not very biased, and everything has been covered very well. And understanding that you guys are from one of the most premier institutes in the country, you'll be going forward and, becoming a part of the corporate and the policymaker world. It is a very positive view of what students have to say about the Union Budget 2023. So I would like to thank you all for being a part of this webinar by the BW Business World, and thank you so much for sharing your views. Thank you, everyone. Have a great day.
Thank you. Thank you for having us.
Thank
Thank
you
you
for
so much.
that.
Thank you.
Have a great day.
Hello, everyone. This is Rohit Chindapalli from BW Business World, and we are today here hosting some exciting names from the tech space, and they're going to give us some frank opinions on the budget 2023, and which was, of course, presented by our Finance Minister Nirmala Sitharaman. But first of all, let me showcase to you all the panelists that we have on board today. And to begin with, let's introduce Jagdish Mitra, who's the Chief Strategy Officer and Head of Growth at Tech Mahindra. Then we have Puneet Agrawal, who is the founder and CEO of CoinX, which is a crypto taxation platform. And last but not the least, Vipul Singh, who is the co-founder and CEO of Aereo, which is a breathtaking startup when it comes to drone tech, of course. So, gentlemen, how was the budget on the whole? Let's begin with Jagdish. Could you give us your views on the budget in general sense?
Rohit, thank you. Thank you for this opportunity, first of all. I think from my perspective and from the industry's perspective, at least from the industry that I work in or represent in within Tech Mahindra and the IT services, the IT consulting world, I think it's been a very, very positive budget. And also or I'll take the other lens of it. We live in the same economy, so we can't do without what it means to our people, what it means to each of us as individuals as a budget. And third, that I can't take away from the fact that we are a corporation, we are a business. So some of the basic things that we want to do as business to grow, how does this budget impact? So let me take these three factors and address it quickly. To me, I think from a tech perspective, we've talked about it, but this time we are trying to make sure that there is enablement of that talk. In the sense, one of the things that technology industry has been proud of is the growth that we have shown in India. The Prime Minister went on and called it the decade. And we've seen the world over has come together and told us that digital public goods, if there is one place to learn, it is here. Right here in India, they've shown us the way how digital public goods get used by mass. And mass, you and I know what mass means for us. It's billions of people and then billions of transactions per day. So, if anyone questions scale, robustness, and cyber and security and data privacy, I think they should come here and see what it's been able to do, right? And I think there is a great learning from there, but there is also a great opportunity. And I think this budget, with the simple steps that it took on future skilling, the steps that it took towards enabling technology conversation around labs on AI and centers of excellence and 5G and so on and so forth. I mean, these terminologies were not visible. Now we are trying to see them in our annual budget discussion with an investment in play. This becomes a great message to the world, saying this country now is not just about digital India through the simple enablement, but now towards India, which is tech enabled, deep tech enabled. That's number one. Number two, I think we have now made this as individuals, it's been very progressive. It was worried that it may become a very, very populist budget, considering it's just the next year to election. But that wasn't the case, I think. It made sure that there are some basic things that the middle income, the basic working class of this country can see, and that's been well addressed, I think, with taxation laws, with some of the savings laws, and so on and so forth. And the third part is ease of doing business. I think the attempt has been strongly made in terms of trying to make sure that simple things like DigiLocker and the documents being used, we don't have to do the same thing in 60 organizations in the government 60 times over, is probably a big step in the right direction. Compliance is coming down. So as I said, technology, individuals, and business, all three, to me, I at least feel very bullish about this.
Yes, definitely. Since I cover technology and I'm completely a technology nerd, I would like to say that hearing about technology in the budget of the country is quite amazing, and it's a big forward-looking step, of course. Let's come towards manufacturing and ask Vipul, what do you think, Vipul, is the perspective for you, and from the startup perspective also, how do you see a budget on the whole?
Okay, well, first of all, thanks a lot, Rohit, for having me here on the panel. I think the budget has been very focused on the long-term impact creation aspects, right? I mean, I also resonate with what Jagdish shared. The investment, any investment on skill development, intellectual property, technology development has a long-term compounding effect, right? And that's what I feel the budget has been able to very clearly indicate, that the government's focus is on creating these long-term compounding effect when it comes to building a robust economy, rather than giving short and crisp, or I would say short-term doses of some economic benefits to specific sectors. So if you look at from a startup perspective, there is also certain specific announcements which were made on giving, let's say, tax relaxation for a longer period for startup, which was earlier limited to 7 years. Now they're saying it will be for 10 years. So again, this means that the startup ecosystem is being recognized as one of the major contributor to the economy now. So that is one very welcoming move from the government. And then the investments which the government has announced towards development of skill sets, especially not the blue collar, but the white collar skill sets of AI, ML, are very, very promising with respect to enabling further the startup ecosystem, and also giving a push to technology creation in the country, which will have a long-term impact. However, I feel that there are certain sectors which are very, very nascent. They are in the sunrise stage. So there could have been a slightly more consideration for those sectors, just to ensure that they have a balance of both short-term and long-term impact. But as a whole, I feel very proud of the whole budget, because this country has never done a very education, skill, technology, and digitalization focused announcements in the budget, which is what I have been able to see. Earlier, it was all brick and mortar announcement, which used to be there, which is not anymore. So it sets the very tone in a very different direction when it comes to the outlook of the country and its leadership in the next 2-3 years, that what we really want to build out of the country. Yeah.
Right. So that's interesting that you said that there are certain sectors that were perhaps not looked into that much. So what kind of sectors are we looking at? What would have
I would say, see, there are still dependencies of this country on various sectors. So if you look at drone tech, if you look at space tech, there could have been a slightly extra doses of support for these specific sectors, which are at a very, very infant stage. Ag tech, if you look at agri-tech, is also at very nascent stage. We have not got to precision level yet, right? So these are the sectors where we still have very young and small MSMEs which are functioning. So if there would have been a slightly extra consideration for either in the form of PLI or grants which further boost R&D, that would have led to a little better situation than what is the current, let's say, outlook of the budget. But overall, I'm not that dissatisfied, because I'm a person who believes into long-term investments. So the government has very clearly made that mark that yes, they are doing this budget for a long-term compounding effect on the economy, not a short-term dose.
Right, that's interesting that you say that, because there was one more drone tech entrepreneur who was telling me that perhaps manufacturing can get a bit more push in drone space, of course. Okay, anyway, moving on to Puneet Agrawal, of course. I think, Puneet, there was a lot of expectation for the Web3 space and the crypto space to get more incentives and more of opportunity to speak up, perhaps. What are your opinions on this?
Sure. Thanks, Rohit, again for giving this opportunity. While I could not agree more in terms of overall focus around the technology and entrepreneurship in the entire budget, Yes, so there has not been any specific mention in the budget speech around cryptocurrencies. Last year, when taxation frameworks were announced on virtual digital assets, it was taxed at 30% on the gains and 1% on TDS. But industry, has been requesting multiple times since then to reduce in the 1% TDS, because the purpose of bringing that 1% TDS is to identify who all are the ones who are trading in cryptocurrencies, keep a track of the transactions, which still could be met with 0.01% or 0.1. So I think that was the demand, or that was the request from the industry, to create a win-win situation, so that traders volumes are also stayed intact and government also keeps a track. But however, with 1% TDS that is already in place, what has happened is a lot of volume from the Indian exchanges has moved out internationally, since Indian exchanges automatically deduct 1% TDS, unlike international exchanges or peer-to-peer transactions where it becomes the liability of the buyer to calculate the TDS. However, in this particular budget, if we go through the memo document that has come out, what happened last year is, while the TDS regulations have come out, it was not very clear on what happens if someone does not deposit the TDS. What happens if someone is, not complying with the TDS norms? What will happen to them? So, what came out as a clarification from yesterday's budget is, penalty clauses have been added that is now also extended towards section 194S, which is TDS for virtual digital assets. So now if someone is not deducting TDS, they are subject to 3 months to 7 years of imprisonment and up to 100% penalty on the TDS amount. So these two things were added as part of the fine print memo document that came in yesterday, ensuring in that if someone is not complying with TDS, there is a penalty clause against it. I think overall this will motivate people again to come back to India, because international, any transactions that happens outside the Indian jurisdiction and with NRIs or international residents or any of them, TDS compliance becomes completely difficult there, and it is as of now it is complete gray on how to calculate TDS and how to comply from these norms. So I think a lot of the retail investors who want a peace of mind and who do not want to get into all of this hurdle would shift their volumes back to Indian exchanges and trade in over here to keep in everything straight, clear, and clean. I think that's what has happened in the crypto industry yesterday.
So that's interesting that you say that. And right now is the time when Bitcoin is also starting to creep up a bit. Do you think that it's a good time to be investing in crypto? That's a risky question to ask.
Right. So I'm not a financial advisor, but I believe again, in the long term. So a core believer of long term, I'm not sure about how things will change in the shorter run, maybe in the next 6 months, 1 year, 2 years down the line. But overall, when we see it as a long term horizon, every time is a good time to invest in, cryptocurrencies, considering which kind of cryptocurrencies you're investing. So yeah, from a long term view, I believe definitely it is.
Jagdish, you talked about a lot of terminologies being added to the budget, of course, and AI. And who would have thought that digital embassies would feature in the budget on any part of any year, perhaps? So, what do you think about all these things coming on to the front, and how much of push do you think that AI is going to give us because of this budget this year?
I mean, look at some of the Rohit, some of the conversations that are in the budget. We haven't seen this before. The AI and 5G discussion that we talked about, the digital locker being used effectively, and if you look at the concept being used for solving the issues related to ease of doing business, is very similar to what we use when we are traveling on Digi Yatra or something, right? One place to lock in, one place to use the database, and one place to drive it. But, there's a separate group being discussed about setting up, what is called as an ADGC promotion. Things like animation, visual effects, gaming, and so on and so forth, and comic promotion. It's technology at the end of the day. So this is all going to go back towards creating the potential for that in terms of, and if you marry that, it's probably our way of saying metaverse. That we're going to put together a complete metaverse related committee and an investment around it. There's a setup of a private equity and a venture capital investment group that is being talked about, to understand their problems and to be able to drive, because this is the time. We are probably one of the economies, if not the only one, which is showing in the scale of the economy robust growth, while the rest of the world is going to be little more struggling for the rest, for the near future. And that, I think, is a situation that the government has recognized and said this is a time for us to go back and ensure that money flow happens, investment happens here, and we focus on investing on this. To your question about AI, I mean, tremendous, right? I mean, we are all suddenly, every guy I speak to says, oh, today Chat GPT said do this. I said, boss, I mean, I also had people who talked about what Chat GPT's ideal budget was going to look like. So from that perspective, we can see all of this suddenly become an AI conversation for fun. I think the opportunity lies for AI for making sure that it has a business impact. Our agriculture. I know, we're talking with people who run drone as a business on this panel, but look at the impact on drones that they've specifically put in. What do you do with that data? At the end of the day, data will be used through leverage of AI. So, and can that be connected with our agriculture productivity? Absolutely. Can that be connected towards defense and technologies that we are trying? We've got 25% allocation from defense budgets for startups and technologies being developed indigenously. So to me, I think the opportunity for AI is really where go back to the old political nara of Jai Kisan, Jai Jawan. This is now AI for Kisan and AI for Jawan.
Right. So we know that it's a very
Every
good
aspect
for
of it.
technology.
I mean, to me, I think it's.
Okay. Please go on.
No, what I was saying is that it's not just about opportunities for companies like us to leverage and build talent like we typically do and build solutions for not just India but globally, but this gives us the impetus to create technologies and have an impact for India. Leverage it for businesses and government in India. And that's the opportunity now for AI for India.
So while this budget was, of course, very bullish on technology, definitely, was there anything perhaps that we missed out on? Do you see anything that we could have addressed, perhaps?
Yeah, there are a few things. I think one, I think we touched upon the startup bit. I think there is an opportunity for us to enable people to leverage the opportunity for startup founders and associates and employees to get a little better advantage of the whole ESOP, the way the ESOP is monitored and the structure of that. Today, if you look at it, I think last count wise, the current policy that was eased out is benefited by about 600 startups. That's a small number when we are the third largest startup ecosystem of 60,000 startups or more. Then obviously something needs to be done to be looked at that policy. Because if out of 60,600 are able to use it, then there is something wrong, right? In the way we need to look at it. Second is the whole ability for Indians to invest into startup and the capital gains tax and so on and so forth. I think that needs to be really looked at in terms of the opportunity there. There are a few other areas that we had talked about as part of our discussion. For example, we had asked about clarification on working from home by employees. Now, we all know that this has now come to stay. This is whole hybrid model of working has come to stay. It's not going to go away. Let the businesses decide. And we today have some guidelines which says that, if you only come to an SEZ, you will get benefited for the employees, but not working from home. I think those need to be looked at. We had talked about it. We had talked about expansion in scope for utilization of SEZ, reinvestment reserve, talked about the liability of ESOP, which I just mentioned, long-term capital gains, and reduction in the safe harbor margins for services rendered by the whole IT, BPM, ITES industry. So there are, 5-6 points that you would have loved to see in the budget, which has not been taken care of.
Right, that makes a lot of sense.
But in the larger scheme, in the larger scheme of things, I think the bigger moves have been not just for today, but also for setting up the country for the future. See, what we are doing for 5G and COE in AI will not change anything tomorrow.
Right.
Nothing will change. It's just that I think it's like laying down foundations and to make sure that it becomes a right impact on what you're thinking about, and that it becomes a top of mind discussion and talent availability, innovation, all of that. You have to lay the seeds. And I think I like the fact that not only have they done stuff for today, but they're also building stuff for tomorrow.
So that's your opinion, that you're saying that it's a nice foundational kind of budget that's been put down, and maybe moving forward it could be even better and better as the years move on, of course. What is your opinion, Vipul, on this? Do you think that there was more to be addressed? You touched upon a bit about what could be done, of course.
Yeah, I mean, I think I can be very specific on this particular part of my input. I think one of the things which was missing from a very long time, and I was expecting at least would be covered in this budget, was the whole addressing of angel taxation. So when we say we want to build a very strong startup ecosystem, and then on the side of it, we also have a very onerous angel taxation policy ecosystem, it doesn't really work in the favor of the ecosystem. So that needs to go, so that more and more Indian capital can be put into these startups. That's the reason why. And the second thing is that we have seen a lot of flipping happening in these startups, where the moment a startup becomes big, starts creating IP, starts registering itself outside India, just because the foreign investors who are putting a bigger check wants them to be there, right? And at the end of the day, the Indian presence is only in the form of subsidiary. So the whole wealth creation which is happening, or the IP creation which is happening, moves away from the country as the startup grows. So in the infant stage, they are using the ecosystem, but that as they grow and they are ready to give back to the country, just because the policy ecosystem is not in favor, the investors ask them generally to move out, flip, and go to the other country, right? So this needs to be, this is something which should have been addressed. The Indian capital investment should have been made more efficient than the capital coming from abroad. And there could have been given enough reasons for the startups to not flip and stay within the country. That is point number one. Point number two, coming to the specific sectors, if you look at the emphasis on technology, then it is going to be enabled by various means, whether it is 5G, drone, space. In all of these three sectors, while there is a significant amount of R&D and manufacturing to be done, there is also going to be a significant amount of solution development, or rather in the conventional terms, say services, which is going to happen. So one thing which at least we were anticipating from the drone industry point of view, that the PLI benefit which is there today for manufacturing could have been extended towards services as well, because that would have led to direct employability or employment creation for the youth, both in the urban and rural population. So that is something which was not addressed in the current budget, because that would have given a different boost to both the space tech and the drone tech sector. And the third and the most important part which we have been missing is that there is no provision for IP creation in India. We are talking about manufacturing, we are talking about jobs, we are talking about tax, but we are not talking about the real wealth, which is the creation of intellectual property. So there could have been extra consideration in the form of grants or schemes to give additional PLI benefit to those who are putting the effort to actually do the research from a fundamental level and create very specific products out of the country and have the ownership within the country, not go and register a patent and have a separate entity holding IP elsewhere in the world. Because that becomes the strength in the long term. So these are the three things which I feel could have been done to be very specific to make this budget more impactful.
Right. Puneet, we are actually very short on time. So could you give us your pointers, ending pointers on what was to be expected from your side?
Sure. Adding on to what, I agree on most of the points that Jagdish and Vipul have said. Just from the crypto industry, some pointers overall, specifically from the crypto industry. One, the common idea that was, drafted and came across last year, somewhere about October or November, which is proposed to be used, that has mentions of virtual digital assets under three different sections. One is business income, another one is capital gains, and the third is income from other sources. However, there is no clarity on what type of transaction is to be treated under way. Like, should airdrop income or should staking income be treated under income from other sources? Should, regular capital gains be treated under, or crypto trading be treated under capital gains? Or, should the future transactions be treated under business income? Like, should we take a similar analogy from the existing stock market ecosystem and then apply it for crypto? Because currently there is no clear guidelines on how to treat that. I think that is something that we were expecting in, since already there is mention of virtual digital assets in 3 different sections. Second, like, there are a lot of people who transact on international exchanges. In fact, 90% of the volumes from Indian exchanges have moved out internationally to different exchanges. Now, would the FEMA guidelines and all of the entire FEMA regulations would be applied under this? If yes, is our investors, crypto investors, required to deal with the LRS limits that have for in general international investing also applied for cryptos? So these are some of the questions that are still unaddressed, and we are industry is not very clear on how to tackle this down as of now.
Right. So those were some great responses, guys. Gentlemen, I would like to kind of thank you for your frank opinions. I think it has been a good foundational budget, and all of you have provided us, BW Business World, with a great deal of frank opinions, of course. And thank you for kind of taking your time out to do this for 30 minutes or so. Thank you, Jagdish, Puneet, and Vipul. I hope you have a great day, and cheers to 2023, of course. Years like.
Thanks a lot, Rohit. All the best to you. Take care.
All the best. Bye-bye.
Bye.
Bye.
Thank you. Yeah. Shit, yaar. Fuck. What the hell is showing me?
Hello, everyone, and welcome to Business World. My name is Tarannu Manjul, and I'm an assistant editor with BW Business World. And I would like to welcome the students of Indian Institute of Technology, Kanpur, for a special webinar, a very exclusive webinar on the Union Budget 2023. As we all know that the Indian Institute of Technology is one of the premier engineering institutes in India, and the students, of course, have a different viewpoint altogether when it comes to union budget or the government policies. So yes, first of all, let me just welcome you all. And if we can have a quick round of introduction with everyone. Rajdeep, if you can introduce yourself.
Hello, ma'am. Thank you for this opportunity for coming in this webinar for Business World. I thank you for this opportunity. I am currently pursuing my MBA from IIT Kanpur. I am a 2024. I'm going to be passed out in the year 2024. Currently, my focus areas are finance, the data analytics department, and thank you for this.
Thank you so much, Rajdeep. And in fact, Harsh, if you can give me your small introduction.
Hello, ma'am. Thank you for this opportunity. So I am also an MBA person from IIT Kanpur, and I did my bachelor's in chemical engineering, and my MBA was mainly because of my focus in the sustainable development and the waste management industry.
Thank you,
so I'm
Harsh.
looking forward for a startup in this industry. Thank you.
Thank you so much. Thank you so much, Harsh. And Tapesh, if you can give me your small introduction.
Can you hear me, ma'am?
Yes, we can hear you.
Yeah. So good evening, ma'am. So ma'am, I'm currently doing my MBA from IIT Kanpur. I as well will graduate from 2024. My major focus is on finance and economics. Yeah. So glad to be here.
That's a very interesting topic, because the finance and economics is something which union budget has actually put a lot of stress on. And Prateek, if you can give me your small introduction as well.
Hello, ma'am. Good evening. Thank you for giving me this opportunity. Currently, I am pursuing my MBA at IIT Kanpur. I intend to do my specialization in MBA Finance. Prior to this, I have worked in IT sector for year and a half. So that is all from my side. Thank you.
In fact, Pratik, I would come back to you when I ask a question about the IT sector because you have worked with the sector as it is.
Yeah, okay.
Darahas, if you can have your small introduction.
Definitely. Firstly, I'm really excited to be hosted by Business World, ma'am. I really thank you for the opportunity. I myself am Darahas. I'm from Hyderabad, and currently I'm pursuing my MBA from IIT Kanpur. I'll be passed out. I will pass away. Sorry, I will pass out in. I will pass out in 2024, and I'm trying to major in finance and analytics right now.
Perfect. That is wonderful. Gaurav, if you can give your small introduction, please.
Hello, ma'am. I'm Gaurav. I'm pursuing PhD in Power Finance and E-Mobility from IIT Kanpur. I'm also a PMRF fellow here. I've done bachelor's in mechanical engineering from IIT Rupert. Then I've worked in IT industry for 2 years. Then I'm pursuing PhD here.
Perfect. We have people from finance and we have people from IT sector. In fact, these are the two sectors which were, amongst the 7 priorities of the union budget yesterday. So quickly starting with the first question, in fact, and I would like to know all of you, giving your basic opinion about the union budget. I'm sure you guys must have seen the budget and, analyzed it and discussed it over a cup of coffee or a cup of chai. So coming to you, in fact, Pratik, what is your opinion about the union budget 2023?
Yes, ma'am. Like this budget that has been launched like yesterday, I feel like it is extremely well balanced budget because it's focusing on all the major 7 priority sectors like like Honorable Minister, Finance Minister Nirmala Sitharaman has said, like they are like acting as Saptarishi. So I think that is really well balanced, and the main focus is the like tax slabs that they have reduced like to 5. So that is one really good thing.
Perfect. In fact, you spoke about the tax slab. That was the major thing which people were actually waiting for because it's been a long time that the tax slab hasn't been changed. Coming to Rajdeep now. Rajdeep, what's your opinion on the union budget?
Uh, Ma'am, the budget presented yesterday has brought a lot of hope in the middle class people of our country. It has brought a lot of development strategies. It is being balanced. As we all know, this is the last budget from this government and elections are coming. So they have tried to keep it a balance by providing some amount of money to the people of the society, as well as keeping some room for the economic development. What we can understand as an overview of the budget is it is one of the knowledge driven, where we have seen the impact of technologies, upcoming technologies, and it is kind of a technological driven economy which they have tried to create. What I have seen as the major as one of the key points of this budget is the increase in the investment in the capital sector. That has been really a huge jump with 33%. So I believe that will have a lot of impact in the employment of the youths in this country, and I hope this budget will do good and do justice to the intentions behind them. Thank you, ma'am.
In fact, that's what everyone is hoping with, fingers crossed that
Yes, ma'am.
people actually were looking forward to a budget for the middle class specifically because the middle class is the one which is always missed out. Coming to you, Harsh, what is your opinion about the union budget 2023?
Ma'am, before coming to budget, I would like to point out that the economic survey, most of the indicators, what we can see is now our country has fairly recovered from the pre-COVID levels. So first of all, it is a good thing. And now, as we can see, the government is agile towards these planning, whether it will be short term or long term. So it is first of all a good point for us to note down. Other than that, what we can see is in the finance sector, tech-driven finance is definitely helping us out. Whether it would be the microfinance or the finance for like seed financing for the startups, etc. Other than that, one more thing which is very important for us is like sustainable development or the green ecosystems, which is the government is focusing on at this point of time, which is very important. And it will definitely create opportunities. And as Rajdeep has already mentioned about the capex has already increased. So this will definitely create many of the opportunities for both youth and whether it will be very highly skilled people or even for the people who are not very skilled. That's it from my side.
In fact, we will come to that point of, skill development and skilled people. Darahas, if you can give your opinion on the union budget.
Definitely. I believe the introduction of the new tax regime has taken a limelight among all the initiatives and changes, ma'am, and it is rightly so. The new regime has made taxation easier, and while it may seem beneficial for an average middle income person, I believe that is not the whole story. For example, in the old regime, you were allowed to take a tax exemption against house rent or mutual fund investments and medical insurance. I believe ATC and ATD. But that is not the case anymore. And since these deductions are not available under the new tax regime, people could take a lazier approach towards their savings, and the savings rate could plummet. It is just a speculation, but and one might ignore health and life insurances. This would also decrease investment, but could increase consumptions, which would ultimately lead to increase in the GDP. And for the rich folks, they've always been taxed the highest among any country, and one of the highest is in India, and that has been reduced. But also above a certain tax slab, the rich were evading the taxes by buying properties and other with the profited amount. And now in the new tax regime, there is a cap for such an activity, and this would lead to a dilemma of choosing between the old and newer tax regimes for the rich. And a lot of folks are forced to save and invest just because they wanted to save tax. And you might normally invest in a PPF or something like that in a locked-in period, but that is not the case anymore. People would take a lazier approach towards insurances and other things like that. That was my take.
Definitely. In fact, the lazier approach, that is what everyone was actually, thinking about, that this new tax regime will actually make people a little more lazy towards savings. And that's the reason that was a pain point for the insurance sector. Tapesh, coming to you, what is your take on the Union Budget 2023?
Ma'am, rather than going into the specifics, I would say that the government wants that we become a developed nation within 100 years. And for that, it has created a list of 7 priorities. To name a few, I would say the youth power, the financial sector, the green growth, unleashing the potential, infrastructure and investment, and many more. So, ma'am, I would say that rather than like this is what the government has to do, like rather than going into like various sectors, prioritize certain sectors and get into those and work on those for a certain amount of period and give the intended results. And that is what the budget has given us.
Perfect, Tapesh. In fact, Gaurav, if you can also share your views on the budget, what is your opinion about it? Gaurav, unmute yourself, please.
Yes, yes. Most of the part has been covered by all of these guys, but I would like to focus on a few things, like the 4th phase of Pradhan Mantri Kaushal Yojana. I'm looking forward for this scheme because India is a major source of skilled labor, which is largely unemployed because of recent pandemic. So I'm looking forward for this opportunity, like how the government is planning to roll out this phase of this scheme, because the previous phases were a little bit failures in some sense. And along with that, I would like to see how the green hydrogen mission will take up in near future, because climate problems is a wicked problem. Wicked problems are those who has too many constraints. That's very difficult to find a optimal solution. So these are the 2 main focus for me, apart from the tax slab and the capital investment. But I would rather focus more on, I would prefer to focus more on the revenue expenditure part in the education sector, because what we have seen during school days, like in rural India, you create a school, but you don't have a teachers. So you need to create a school, but you also need to have a teachers to educate the new youth. So that's my point. Thanks.
Perfectly taken that point. In fact, that was one point which a lot of people felt was missing, because education wasn't focused much in terms of the primary education. There
Ma'am, I believe you're lagging, ma'am. We are not able to hear you or see you moving.
Just a minute. Is it fine now?
Yes,
Is it fine now?
Yeah.
Yeah. I think I'm lost out on the connection. I'm so sorry. So my next question now would be to Harsh and Darhas. Guys, what do you think? Like when you look at the budget, and there was a special component, as Gaurav also perfectly pointed out that there was a special component dedicated to skill development and the Kaushal Vikas mission. Do you think that this would actually create a better workforce, a better skilled workforce in the country, and it will actually increase employability amongst the youth? Harsh, going to you first.
Ma'am, let us look it and as a cycle. Let's say there's a demand for skills, then a supply for skills, and then we have skills. Let's say it is a cycle. Now we have existing skills, first of all, but maybe there's not a demand for that in the market. So that is why many policies like, one district, one product policy, or the handicraft and the Unity Mall, as mentioned in the budget. So this will create employment in that way. Secondly, understanding what are the current demands in the industry right now or the future, and then developing those skills accordingly, which will further create a better supply of the workforce. So first of all, this cycle, so the unified skill development, this platform will definitely help us out. Other than that, in terms of education also, if someone is pursuing engineering and he wants to get into maybe movies or animation, and he wants to do a course in let's say dramatics, so having a ecosystem which can provide these kind of cross educational cross courses, that will also help us out. So I think it is a positive move. That's it.
Thank you, Harsh. And thank you, Harsh. And Darhas, if you can give your opinion on the same.
Definitely, ma'am. I believe Harsh has given a general view. I would like to give it some more pointers. As we know, India is a country of the youth. The average age here is around 28 years, and any policy changes, especially towards the youth, they have a huge impact on the future of the country. And I would like to just give some points about all the policies that the government has given us this year. They have launched PM Kaushal Vikas Yojana, which is used to skill youths in the new age courses like drones, 3D printing, and AI. They have also introduced Pan-India National Apprenticeship Promotion Scheme. This will provide stipend support to an estimated of around 47 lakh youths over the next 3 years. And they've also introduced a National Digital Library. This will be able to set up for children and adolescents in English and regional languages. They've also introduced Ekalavya model residential schools. They'll be introducing them in the next 3 years. And it will be able to educate more than 3.5 lakh students. And looking at the Union Budget 2021 and its skill development component, I believe it can help youth in many ways. The government has allocated funds in such a way that it can help youth gain skills, mainly in also in STEM courses, science, technology, engineering, and maths, as well as areas like digital literacy and entrepreneurship. And I believe this is a great step towards helping the youth find employment and gain economic security. And the budget also helps provides funds for educational institutions and training centers, which can help the youth gain the necessary skills and knowledge to succeed in the job market. Just compiling all the points that I've already said above, all the above initiatives basically help the youth of India find an economic stability and skills and build a better future for themselves.
That's a very valid point, because that is something, which people were actually expecting, that employability is a very big problem, and unemployment, in fact, is a major problem. And the budget was expected to target that problem majorly, because this is actually the last full budget before before we have the union, the next general elections. Coming to the next question, in fact, since there was a lot of stress on the fact that the budget will be promoting Atmanirbhar Bharat and it's an Amrit Kal budget, my next question, in fact, is to Prateek and Rajdeep. Do you guys think that union budget actually promotes the Make in India focus, the Make in India point? Rajdeep, what's your opinion on this?
Ma'am, there are certain points which proves that the government is still looking to promote the Make in India aspect of the country, to promote the Make in India and to boost the manufacturing sector of this country. What should have been done is to impose the custom duties on the import of the certain things that we can produce. So government has tried to understand those items which can be produced by India. Suppose let us take an example of this kitchen chimney systems. So what they have done is they have increased the custom duty of importing kitchens, whereas they have decreased the custom duty for the import of the heat coils. So these are some of the items that where they have increased the custom duty in case of rubber industry. They have increased the custom duty for tires. So in this way, government is trying to create an environment to give opportunities to these industries to have their own manufacturing units, to have to give the boost and support from the government to produce things within India. And regarding this make AI in India, there's something technological aspect of this make in India which has been launched and which is getting a good attraction in this economy. So I believe that the government is completely intended to boost this make in India progress of this country by supporting the MSMEs, by supporting the this manufacturing sector of India, and by boosting the agricultural technological aspect of this nation.
Perfect, Rajdeep. In fact, Pratik, if you can also share your views on this.
Yes, ma'am. I also feel like government, from the budget, we can see that government is still promoting Make in India policy. They have increased the budget from 100 crores in pharmaceutical industry to 1250 crores. So we can see that they are giving more importance towards the pharmaceutical sector. Like we should produce, like we have seen in COVID crisis, we had to import some of the necessary stuffs for treatment, and also I think this is one good boom. Then scheme for EVs, FAME scheme is being launched in the budget, wherein the expected increase of budget was from 2908 crores to 5200 crore. So this will boost the EV sector of India. And also coming to the technology sector, we have seen that three major AI centers will be set up in India in some premier institutes. So I think this will also help in the technological aspects app development and all. And also the scheme, as Harsh mentioned, KVP scheme for getting the knowledge, and also there the government is giving subsidies to learn 3D printing, AI. So this and all will create the opportunity for the candidates to make in India. So, and also the imposed duties on rubber industry has also increased from 10 to 25%. This will force India to make rubber products inside India only. So yeah, that is all.
That was wonderful. In fact, that was the whole stress on the budget that we have to promote indigenous manufacturing so that the import is, reduced and the export is actually increased. And that's the way we will actually get into the developed mode instead of the developing country mode. So in fact, if you heard the budget speech yesterday, the one part which got the biggest applause was the sobs given for the IT sector specifically, because the government has their digital India mission going on currently, and there was a lot of stress on the IT sector. So my next question in fact is to Tapesh and Gaurav. What do you guys think is the whatever the sobs that have been given to the IT sector, what is your opinion on that? Coming to you, Tapesh.
Yeah, ma'am. Ma'am, the Union Budget 2023 has put a lot of emphasis on the IT sector, with the government introducing several SOPs to help the sector grow. The government has announced an allocation of 16,500 crores to help strengthen the IT sector in the IT infrastructure in the country, which will help to improve the quality of services available. Additionally, the budget also includes provisions to promote research and development in the IT sector, as well as incentives for startup. For instance, 100 labs have been created for 5G, which will tap employment and business opportunity. In all of these measures, are expected to boost the growth of the sector, create jobs, and help the country become a major IT hub. Yeah, ma'am. That's all.
Tapesh, in fact, Gaurav, if you can share your views on this one.
We all know we are a major player in the service outsourcing market, and we are doing good in edtech also. Government has laid out plans to improve this skill in agri-tech sector, but where we can tap on the global market is the fintech sector. UPI is the major success, and we have launched the RuPay card, which has having better payment dividend as compared to the Visa or the MasterCard. So if we focus more on fintech in the developing nations like Africa or Middle East. So I think we should create SOPs for the fintech sector. And along with that, we need to focus on the wealth creation of IP-based services. Like we develop services, but we don't create products. So if the government can lay out phase plan from, like, you can train students to think in that particular manner so that they develop products, small products, like you develop 100,000 products, maybe one becomes a major success. And along with that, we need to reduce the some of the things which we can generate by yourself. Like we have banned TikTok, so multiple apps have come in. Some in similar sense, like China has done good that they have banned Facebook and Twitter. Like if we ban Twitter across India, the people will be forced to use coup in some sense. So we can develop same, like we need to focus on our own well-being instead of the global, like Vasudev Kutukumbakam will come later. First, we need to become self-reliant in this sector. That's my personal opinion.
That was a very valid point. In fact, when you spoke about TikTok and Coup and Twitter, a lot of people have actually started shifting to Coup because of the ease of using that app, and Twitter happens to be just a little more fashionable. But the fact is that it's getting expensive to be on Twitter these days. In fact, now we're moving towards the end of the webinar, and we've been very good on the time. So my question now would be to all of you. In fact, what has been your biggest takeaway from the Union Budget 2023? And starting with Prateek. Prateek, if you can share your biggest takeaway from the budget.
Ma'am, yes, like biggest takeaway was Make in India. Then second was the tax slab changes that they made. And the thing that I was like hard to find was the semiconductor industry. So that we should have been like focused on. And also like keeping priorities, seven priorities, like seven priority factors. So I think the budget was very well balanced, but these two, three things that should have been included.
Definitely, Prateek. Rajdeep, if you can share your takeaway from the budget.
Ma'am, there are few takeaways that I have, and I want to line them one by one. The most important being the capital expenditure that have increased hugely from in the last 2 to 3 years. Even though I'm a little bit disappointed because when we compare ourselves with countries like China, when China hit its 1 trillion economy, they opened it up for the capital expenditure, where they used 4 to 5% of their GDP, and then subsequently improving it to 6 to 8%. So I believe that is somewhere, even if we have increased a lot, that is somewhere we lack. We need to open up the GDP economy and keep it more for the capital expenditure, because we know that brings in a lot of employment opportunities for the youths of the country, for the investments. And the next is the room for the macroeconomic environment that we have. We are trying to control the inflation. We are trying to reduce the fiscal deficit that we have, and we are trying to increase our forex reserve. So, speaking in the terms of financial language, this budget gives a whole room for the scope and development of this macro environment of this country.
Perfect. In fact, perfectly placed, Rajdeep, because that was one thing which a lot of people actually found missing, and you've just given words to their opinion. Coming to you, Harsh, what was your way from the budget?
Again, I'll come to skills that in terms of diversity, we used to study in our 5th and 6th class, like unity and diversity. So in a very similar way, growth because of diversity, in my opinion. So, focusing on a different industries, like very niche industry, this time, like there was a special mention about artificial diamonds. So government will be supporting this industry. So in the same way, so in the same way, if we are able to go into these niche industries and provide these skills to the people, so first of all, we'll be able to reduce the attrition. And as we can see, mass layoffs and high competition in some particular industries. So if we are having a certain diverse youth in terms of skills, then definitely the attrition will be reduced, and we will be growing in a complete way. And one more thing, in my opinion, was certain things could have been also privatized, but maybe because of elections. So that's it from my side. Thank you.
Definitely. In fact, since it was the last full budget before the elections, so
exactly,
obviously the center must have kept the elections in mind, and that's That happens with everyone. That happens with every
Those are
government. That
some
happens
of the sensitive topics they won't want to touch.
Yeah,
Yeah,
exactly.
exactly.
Dara, coming to you. What's your biggest takeaway from the union budget?
Yes, ma'am. I'll keep the answer short as most of the points were already covered by my peers. The budget primarily focused on consolidation or reduction of the reduction of the fiscal deficit by focusing on raising the capital within the country, and they are also trying to increase the consumption of an everyday average Joe. I believe the new budget has done a great job in achieving these targets while also making it financially easier for the taxpayer and also keeping it simpler for the taxpayer. The taxpayer is not as confused as he was in the old regime. And I think it is an appreciable feat, and I believe the budget has done a great job.
Perfect, perfect. That was very short and crisp, Dara. Coming to you, in fact, Tapesh, what is your biggest takeaway?
Ma'am, considering the finance aspect, I would say the simplification of indirect taxes. And that because of the simplification, we have been like it will deliver higher exports, like higher domestic manufacturing will go on, like we will be able to deliver more on green energy and mobility as well. Coming on the economic aspect, like the states are being encouraged to set up unity malls for promotion of sale of one district, one product. And coming to the business aspect, I would say like various compliances and legal provisions have been reduced. Some around 3,900 and 3,400 legal provisions have been reduced, which will enhance the ease of doing business. So, ma'am, these are the three biggest takeaway that I could get from the union budget.
Perfect. In fact, this is what I was actually missing. Like, no one spoke about ease of doing business, but of course, yes, ease of doing business was one of the biggest pointers which was, spoken in the budget. Gaurav, coming to you, what has been your biggest takeaway?
Like I would say, government is focusing on solving today's problem, but they should also focus on the solving tomorrow's problem. We also need to create a domestic wealth creation ecosystem. So domestic funding of startups, like people should invest more on stocks because a major chunk of the wealth creation goes to the upper middle class of people. So all the people should get connected to the economic ecosystem of this nation. Along with that, we can also tap on the export market. Like one discipline product, the local vendor do not know how to export its product to global market. So that we can educate them in some sense, so that that particular lower middle class businessman, the MSME businessman, can export their product in the global market instead of the local market. And the third thing is we can also focus now on power trade. India is sitting on power surplus, and our neighboring countries are facing power shortages like Sri Lanka, Bangladesh, Pakistan, we all know. So if we agree on mutually benefits, so we can earn a good amount of money from power trade from those nations. So these are few takeaways for me.
Power trade is one point. In fact, Gaurav, you very rightly put across, because we are setting up a lot of new power stations and power plants and projects here across India. And if we are able to sell off that particular power, we actually get a good get a good amount of money coming into the country for development factors. That was wonderful, discussing the union budget with you guys, and it was a very diverse opinion, despite the fact that we always understand that people coming from IIT would have a specific opinion. But yes, it was a very diverse and a very good viewpoint coming from all of you. Thank you so much for being a part of this wonderful webinar and being a part of BW Business World. And stay tuned for a lot more on the budget and a lot more on the business sector. Thank you so much. Have a great day, guys.
Thank you.
Thank you so much for hosting
Thank
us,
you
ma'am.
so much, ma'am.
Thank you.
Thank you for this.
Thank you so much for hosting us. It was a really great.
Thank you.
Yeah. Have a great day, ma'am.
Thank you.